we're going to create a system that works, and we're going to do it in a way that takes out human error. Bitcoin being the best example, by setting things like not just a transparent ledger, but by the way, this is going to be a monetary system that has a fixed supply. You can't fuck with it. No government can ruin it. No guy who has to win elected office or save his ass can say in the short term, like, all right, we're just going to print money and solve the fucking problem and leave it to the next guy. There's no kicking the can down the curb.
Yeah, Bitcoin's not a bubble. Bitcoin is the pin that pops the bubble. That's like a kind of an idiom in crypto.
What's cooking, everybody? I am joined in the bunker today by my friend Cole Kennelly. Cole works at a company called Staked, which, let me put this in English for you. You most likely have US dollars if you're listening to this, and you may put said dollars in a savings account at a bank, and it earns interest, and it probably makes like a penny on $100 a year because interest rates are nowhere and you make no money. Cole does that, except not with US dollars. He does it with, you ready for it? Cryptocurrency. Yeah, we're going there today. So Cole has been in this space for a long time. He was there before it was cool, when it was cool, after it was not cool, and when it's apparently like kind of cool again. He is somebody who is, I believe he says he started really in this in the beginning of 2016. I think he talks about that today. Total genius, very smart. And by the way, Staked is not his only project. It's not. It's one thing. His other thing, he's a co-founder with one other person, and I believe his title is CEO. And it's called Volmex.Finance. And it is a volatility index that you can invest in built on the Ethereum blockchain. And I didn't watch, but I can imagine the eyes on your faces just glazing over, your ears ringing, and you going, what the hell did he just say? We do talk about that today, but that is not at all the focus of this conversation. You will at least understand what that means, though. Cole is somebody I wanted to bring in here to talk about the space in general. This is important. It is a weird time, a tragic time in many ways right now going on in the world with the pandemic and everything around that. But we have also watched the continuation, in fact, the nuclear bomb of the trend that's occurred not just in our country, but around the world, especially since the global financial crisis in 2008, 2009, of governments printing more money and us not knowing anything about what it actually does to the value of said money, or most of us don't. And it's something that I spent a lot of my life clueless about and really only started paying attention to in like 2017, 2018, when I started to become aware of crypto. My belief is that crypto is very much here to stay. It is a way of the future, and it is a path to financial freedom. Now you say, all right, that's a lot of buzzwords, a lot of rah-rah, okay, whatever. Cole is here to actually make some sense of it and to open up the conversations. And look, it's a complicated topic. I've talked about it before. I've told you that one of the big problems with the crypto space is that they haven't found a way to bring it in English to the general public, including guys like myself. And it's true. In a lot of ways, they haven't. And there will be times today where we ramble. And there will be times where we went in little circles. And times where you're like, what the hell did Cole just say? However, I talked to Cole before the podcast, and he encouraged me to cut him off when he was getting a little bit too complicated, to try to define things as he went along. So I don't like interrupting the flow of conversation, but you will hear me do that sometimes today just to keep it honest. I will say that there are a few times where maybe we didn't end up coming back to the original point of the conversation just because we went deep on a whole bunch of rabbit holes. And there will be some times where you're probably like, I really didn't get that. That said, I wanted to bring him in here for 2 to 3 hours just to make sense of some of it. And if we could get a half hour out of it that was really valuable for people to feel like they understand and how this stuff is actually conceptualized into everyone's reality, then it would be a success. So I hope we did that. Cole did a phenomenal job. He's huge on Twitter, by the way. And this dude, he's subtle and he's humble, but he is one of the greatest Twitter networkers of all time. This man has sat with some of the smartest people in the world when it comes to cryptocurrency and blockchain and other things, strictly by networking and meeting them on Twitter. And I can verify a lot of that. I mean, it's pretty crazy, some of the meetings he's had. So he is legit. He's a young killer. And I look forward to having him in here again. Hey guys, very quickly. Cole and I recorded this episode a couple days before Christmas. So 2 relevant notes I just wanted to add in here because I did the intro right after we recorded the episode. Number 1, the Bitcoin prices you hear us discuss, which is only a couple times. Obviously, they've changed a little bit because Bitcoin's ripped since then. And number 2, we did not really discuss Ripple and XRP very much, but there was a 5 or 10 minute area where we did. And this podcast was recorded hours before the SEC filed their lawsuit against Ripple. So when you don't hear any mention of that lawsuit, that's why. It hadn't happened yet. Anyway, back to the intro. Other than that, if you're not subscribed, please subscribe. If you're not subscribed on YouTube, please subscribe there. I'm dropping clips almost every day. Pretty excited about that. I think that gives a good feel for what the show is all about, just in little bite sizes. And keep those 5-star review on Apple Podcasts coming. You're doing an amazing job. Thank you to everyone who's done that. That's a huge help. They're really incredible. I really, really appreciate the people who do that. That's amazing. And finally, started this a few weeks ago, but if you can, share the podcast with 1 week. Can you tell I'm a little tuned up? It was a long day. I had a long conversation with this guy. I've been facing a little bottle of wine here. Don't sue me, Anyway, let's try that again. If you can, please share the podcast with one friend who you think might like it. And obviously to everyone who's already done that and has continued to help me build this audience, thank you so much. And that said, you know what it is. I'm Julian Dorey, and this is TRENDIFIER. Let's go! This is one of the great questions in our culture. Where is the nuance? You're giving opinions and calling them facts. You feel me? Everyone understands this, but few seem to do it. If you don't like the status quo, start asking questions. What's cooking, brother?
Hey man, thanks for having me on. This is great to be here.
Dude, I'm glad you came down. Excited to have you on. This is a very interesting time to be talking to a man like you, so I've been looking forward to this one. But, dude, what's going on with Bitcoin?
Bitcoin's it's going to the moon right now. It's at 24K. It's all-time high. Or 23.8K or something like that.
Yeah.
Market's looking really good. There's happy to get more into it, but that's at a high level. Bitcoin is doing super well right now.
Yeah, I think a lot of people are very, they hear Bitcoin, they hear cryptocurrency, and they're still very scarred from 2017 when everyone and their mother was jumping in on the bandwagon. They knew nothing about it, and then everything crashed in 2018, and so a lot of people just kind of left that behind and said, oh, we don't talk about that. And now here we are in the midst, or towards the end, obviously, like very end of 2020, which has been a hell of a year in all the wrong ways. But we've seen a complete reintegration of the space into our public sphere. Yep. And we see a lot of people talking about it again. And my question for you is, as a guy who's been in this space consistently since before 2017 even, what has the vibe been this time around that makes you think like, hey, adoption's actually here? And that doesn't just mean for Bitcoin, but just like in general for a new way of looking at money.
Sure. So the primary difference between what's going on in 2020, bull market and crypto that from 2017 is there's largely this institutional buy-in this time around. You have folks, legendary fund managers like Paul Tudor Jones, Stan Druckenmiller, Bill Miller, coming into crypto, basically, eliminating any reputational risk for any other fund managers that come in after them. So that's certainly big. And you're also seeing companies like MicroStrategy, a publicly traded software company that's buying Bitcoin with their balance sheet.
You're talking about the guy Michael Saylor that we're seeing talking about this like every day on CNBC and Bloomberg and Twitter, right?
That's right, Michael Saylor.
Got it. He runs that company.
CEO of MicroStrategy, right? So at a high level, this time around, there's been a large institutional buy-in from both, institutional investors as well as different companies in the markets that have kind of gravitated towards crypto and are now entering the market. With Ethereum, there's been a ton of growth with a number of applications that have been built on Ethereum, largely around finance. So there's kind of a movement going on called Decentralized Finance or DeFi. So Basically, what's going on is there's there's these financial applications that are being built on Ethereum. They're open source and publicly available, can be verified, they're provable, and they're all, they can be used together. So you can think of them like a common analogy is Legos. So people call these protocols money Legos. So, a lending protocol can be used with exchange protocol, and these protocols together can be used to create a third protocol, and so on and so forth. So really powerful concept there, happening with applications on Ethereum. And there's, at the beginning of the year, there was about $500 million locked in these DeFi applications. Today, there's, north of 10 or closer to $15 billion. So it's grown, by orders of magnitude this year. So overall, there's, a ton of developments happening in, both Bitcoin and Ethereum and a lot of other, related areas. So I think it's a super, exciting time in the crypto space.
All right, let me back you up because you just dropped like 4 or 5 bombs on us there. So let's take them one at a time. The first thing you were going through was the institutional buy-in to Bitcoin, and I think this is a really important point. I think you mentioned Paul Tudor Jones, Stanley Druckenmiller, some of these big hedge fund guys. Obviously, Saylor and what MicroStrategies is doing as a company. To be clear, I think when you said their balance sheet, they're putting it in Bitcoin. They've basically taken, I think at this point, maybe like $1 billion worth of cash on hand and invested that in Bitcoin. Is that correct? Somewhere in that neighborhood?
So I believe the initial investment, Michael Saylor had made a personal investment first. He disclosed that properly to the company. But afterwards, I think MicroStrategy made I believe it was $325 million Bitcoin investment around, if I'm not mistaken, it was around 10K. So
with Bitcoin at 10K.
Yeah, so Bitcoin's at 10K. Fast forward until a few weeks, in the last few weeks, MicroStrategy, they announced that they had bought $50 million more Bitcoin at around 19K. The coming week from that purchase, they announced that they were issuing a convertible note to buy more Bitcoin, and we're doing I think it was like $600 million dollar financing. So all in, they've purchased. They have I think more than $1 billion worth of Bitcoin. So it's certainly a material bet for them.
Now, that's one company, but we've also seen Square, run by Twitter CEO Jack Dorsey, take up positions there. We have seen Wall Street also come out, and we've seen some positions, like Mass Mutual took $150 million, I think. I'm forgetting some of the other ones, but I'll put them in the show notes. There's been several. But we've seen a lot of quote-unquote old heads on Wall Street come out and suddenly be like, yeah, no, I get it. Like, I'm in. Right? So back in 2017, again, to bring it back to that first time around, yes, you had some guys like Peter Thiel out in Silicon Valley take a position. You did have some hedge fund guys actually buy into it. I know Mark Yusko was one of them.
You have guys like Tim Draper, Chamath from Social Capital and formerly Facebook. Those are some of the bigger names as well. Naval, certainly. But the point stands that now, those are, early stage tech investors, and now we're seeing, for folks like, Mass Mutual is super interesting.
The powers that be. It's basically the traditional powers that be coming in and saying, okay, all right, we at least publicly saying, we get it, and we're in. And I want to start with the simple part of Bitcoin here because, again, a lot of people hear this stuff and their eyes glaze over. And look, I think part of it is, it's two things. Number one, we have a lack of financial literacy in this country and around the world, for that matter. And this is more finance, and it's a little more complicated too. And number two, because everything in the crypto space, so to speak, in that stratosphere, touts itself as transparent, and it is, with what you can know about where it exists, what's on the blockchain, all that stuff that some people are like, what the hell is he talking about? But basically, you can go look at this stuff in ways that you can't look at it in a traditional banking system. But because of all that, when people go to look at it, they're like, what the fuck? Because it's so much. And they're like, I don't get it. And that's been a big resistance point. And I think that the crypto space, one of the things that they seem to be getting a little better at, but they still have a long way to go, is that unlike Silicon Valley, who when that was really growing, found a way to match the marketers with the genius and then take it to the everyman. In crypto, all the genius is there. That is so clear. But the messaging to take it all to the everyman has not been as effective as Silicon Valley eventually got it. It's still early here. But when I look at this, like we were talking about Ethereum. I don't know if that was on the podcast or right before, but then you start getting into things like that and people are really like, all right, you're losing me. What is it? So with Bitcoin, let's just completely start there right now.
Sure.
This is something that was created on October 1st, 2008 by Satoshi Nakamoto. And then I want you to take it from there and kind of walk through just the beginnings of it and what the general concept was for people to understand.
So Bitcoin was created in 2008, 2009 by a pseudonymous creator named Satoshi Nakamoto. The title of the Bitcoin white paper is Bitcoin, a peer-to-peer electronic cash system. So, from the get-go, the premise has always been, send anyone, anywhere in the world, any amount of money at a low cost. So if you're sitting in New Jersey or New York, with Bitcoin or other cryptocurrencies, folks can send funds, around the world with, no permission, no authorization required from any third party.
Bitcoin was the only one at first, though, right?
Bitcoin is the first cryptocurrency. There's actually been attempts to create other cryptocurrencies before, but Bitcoin was certainly the the first, let's say popular cryptocurrency. There's other attempts called, by David Chaum called, Hashcash. I forget if that's the right name, but
that was in like the 90s.
Yeah, there's been all these, there's been a kind of cryptography movement since the 80s or so, and it started getting applied to money eventually. But so basically, Bitcoin is the first cryptocurrency. It's also the first application of blockchain technology, which is effectively a distributed ledger that number of nodes, number of participants in the network maintain.
Okay, let me stop you real quick. And sometimes, today, we're going to do this just because it is a little more complicated. I don't like breaking up the flow of convo, but I just want to make sure we define stuff. So with the blockchain, that is, for all intents and purposes, for a third grader to understand it, it is computer code that is unhackable. And it creates a ledger, as you said. It creates a record, to use another word, of transactions that happen, in this case with Bitcoin involving money, which is Bitcoin, that then cannot be changed, and they are there as without any third-party interference.
That's right. So it's a cryptographically or mathematically enforced system where the blockchain is maintained by a number of distributed nodes. So in order to change it, you would need to change the copy of the blockchain on all these different nodes, which is really impossible. So, through this distributed network, it's able to kind of maintain itself, and it's certainly immutable. Blockchain cannot be changed. I think of blockchain a lot like the internet or electricity, where the blockchain is like a thin technology that can be applied to a lot of different industries. So think of blockchain can be applied to finance, it can be applied to logistics, it can be applied to the music industry, a number of different industries. Now in the early days, it's finding some product market fit with, finance applications and things that involve money and things like this. But we'll likely see more applications gain steam in the coming years.
How could you apply it? I mean, it's hard enough understanding the money part, and I understand this aspect of it, but for the average person listening, how can you apply blockchain to, say, one of the examples you gave, maybe music, or whatever example is easiest for you to explain?
One of the applications that comes to mind is Axie Infinity. It's a crypto-enabled game, built on Ethereum. So basically the way they leverage the blockchain and crypto is they use Ethereum for storing these in-game assets. So the game is kind of, inspired by Pokemon. They have these little creatures in their game, and the way that the place that these little in-game assets live is on chain. So they live on the Ethereum blockchain. So no centralized, no game developer, no third party can take these creatures away from the players, and they're able to own and can provably know that they have control of these assets. So that's just one way. At a high level, you can think of the blockchain in the music industry, how it could be used to automate revenue shares between artists and other participants, other players in the industry. So
basically, like being able to track statistics on how far music spreads. So where right now we have traditional legacy music, the music business is basically certain people control how the cuts are taken. And now the artists themselves would also be able to see everywhere that happens, like on a high level.
Sure. Yeah, no, definitely. And there's actually some example I have that's in production today and is being used on the network on Ethereum today. So there's a concept called NFTs. NFTs are actually related to Axie, which I was just talking about, which they use NFTs, but NFT stands for non-fungible token. It's basically a crypto collectible. So think of a baseball card that has a digital representation on the blockchain. So there's a number of initiatives with these NFTs today. You actually have partnerships with the NBA, MLB that have started delving into this space, and there's a lot of interesting work being done. But
what about classic art? I'm just thinking about the same application. So you have all these paintings that people supposedly own, and now they could prove it.
So there's this NFT art coming around on a number of different platforms, and what I'm getting at is they're automating basically attribution with NFTs. So every time the art trades, the artist is paid a certain amount. So I think they can set it when they kind of publish it or kind of create the art, but they set it 5% or 10%, and they can always receive some sort of revenue from this art that they've created. So it's a super interesting concept.
It's a tracking signal, basically.
Yeah, certainly. So then there's the crypto art market. If we had a computer, we could pull it up. There's some good trackers.
Give me one.
Let's see. So I think look up crypto art. I'm not sure. Maybe we can add it a little bit.
Crypto art.
See what comes up. Nope.
And I can toss some stuff in the notes after, if need be.
Let me find it. Anyways, there's a tracker that has the most expensive artwork sold, and you'd be surprised. There's some pieces of art, crypto art, that have sold for hundreds of ETH. So that's like hundreds of thousands of dollars. So it's super interesting. There's really passionate community and interesting community forming around NFTs. There's folks that are willing to buy NFTs at at a certain price. So
and what does NFT stand for again?
It's a non-fungible token. So it's basically unique collectible on the blockchain.
Okay.
So think of the baseball card on the blockchain, or a piece of art, or this type of stuff. So anyways, this is kind of a application that blockchain can be used for. I'm happy to talk about DeFi as well.
Let's get there. We just went down a rabbit hole already, and guys, I knew this was going to happen. Cole, we'll get to some of his background organically in here at some point, but this is his world. He knows all this stuff inside and out. This is one of the people I go to on pretty much any question in the space, and he's responsible for a lot of things I know as well, and I've researched myself, so fuck if I appreciate it. But to go back to the original start of that, which was talking about the application of blockchain as it relates to like Bitcoin and what else it can be used for.
Sure.
After Bitcoin was started as the original or the first adopted cryptography, we're talking beginning of 2009, it starts trading. And so as you stated and explained, it traded on the blockchain before there was any other type of cryptocurrency, be it Ethereum or XRP or Litecoin or whatever all these ones are, right?
Yep.
So the idea was that this was going to become a currency. It was going to become an exchange that we trade around the world, like we trade dollars. And one of the things that interests me a ton about it is the fact that it was that white paper that you discussed was released on October 1st, 2008, because that was 2.5 or 3 weeks after Lehman Brothers crashed in the United States. And we were in the midst of spiraling down into this global financial crisis. And one of the offshoots, well, two offshoots were, A, you had all the elites, say the banks around the world basically screw the average man over. And B, in order to get out of that crisis, because if the banks all failed, the entire system would fail and there'd be a worldwide depression that maybe we never come out of, the governments had to create a lot of new money. And so they had to print. They had to get the presses out and they had to say, all right, more euros, more dollars, more whatever. And these are cycles that had already been happening, but they got exploded right there. Mm-hmm. And then they've continued to explode in the decade plus since. And so with Bitcoin, it came out at a time where trust was at an all-time low in these systems. And Satoshi, whoever he or the group of people was, and we don't know, looked at it and said, okay, this wealth is being taken from people and people around the world don't realize it because they don't understand that if in one place you had $2 and now you have $4, those dollars are worth less. And Bitcoin, and this is my favorite part about it, is something that has a set amount. So can you talk about that part next, like how many there are? And
Sure. Yeah, it's super interesting that Bitcoin came out of this 2008 era where there was so much, havoc and I suppose uncertainty, in the financial system. And as I'll get into shortly, Bitcoin, has a lot of certainty, and that's one of the great things about it. So there'll only ever be 21 million Bitcoins in the current kind of setup of the network. I say this because there's some folks in the Ethereum space that like to theorize that there could be more than 21 million Bitcoins if the fees aren't material down the line, if they need to.
What does that mean?
So without getting too far down the rabbit hole, Bitcoin, once the block reward subsidy, once all the Bitcoins are mined, we'll have to see what happens if the fees are, at that point, they're all mined. If the fees are material enough to keep the miners mining, there's no inflation, rewards at that point anymore. There's no subsidy. There's no block reward subsidy. So the fees will need to be material enough for the network to sustain itself. So if they're not, then there could be a kind of a hole in the game theory where, why are the miners securing the network if there's not material fees and there's no rewards? That doesn't make any sense. So,
and when you're saying miners, because this is another thing people get lost on, the whole concept of Bitcoin that was defined in that white paper was that you needed people to adopt because you needed coders around the world to be able to create the next Bitcoins and be incentivized to do so, meaning they are going in and I'm going to whitewash it and say they're coding away to confirm what's on the blockchain, and then as a result, they are paid a predetermined number of Bitcoins, or amount of Bitcoin, I should say, per time that they do that. So you need coders to actually do that. And what you're saying is that if there isn't a price that says this is worth it, like I can actually make money doing this, coders aren't going to want to do that.
What I'm saying is once all the Bitcoins are mined and there's no more like inflation and no more, kind of subsidy, that the fees for the network, the fees on the network will need to be material enough where the miners are making money and covering their any costs that they have. And that, it makes sense economically for them.
Why would you need miners once all the Bitcoins are mined by, and it's year 2140? They'll be done, right? Supposedly.
Well, the miners keep the net, they secure the network and they, verify the network. So, I guess largely the question is just around incentives for miners once all of the Bitcoins are mined. So it's a really interesting topic that actually doesn't really get talked about a whole lot in the Bitcoin community.
Let's go.
Sometimes comes up in the Ethereum community, but overall it's an interesting concept. So back to the original question, there'll only ever be 21 million Bitcoins, kind of according to Satoshi's spec. There's, I think, 18 million or so right now, and they'll, all be mined in the kind of coming years.
A little over 18 and a half.
Right. Yeah. So the market cap of Bitcoin today is about, I need to check. But
call it 400
billion.
Call
it 400 billion. Yeah. It's a large, asset, but not large by, traditional finance standards. Gold for comparison is a $9 trillion asset. So
pull that mic in a little bit. Pull closer.
Testing. Yeah. So that's kind of regarding the supply, and then the inflation is all transparent and codified and completely predictable. So no surprises, no money printing 60% this year in Bitcoin. It's all predetermined and provable. So
yeah, and that's the other thing. When we don't, I kind of mentioned this a few minutes ago, but as an example, when Corona hit and we had the big stimulus come in, big being a whatever word, but it did cost a lot of money. And they didn't just take $3-4 trillion out of a vault. They put it on the dollar ledger. They said, all right, now there's $3-4 trillion more dollars.
Sure.
And so people haven't thought about that, and they look at the stock market, which is back up, to where it was, and forget all the things going on in the stock market with the dispersion and all that. Just the overall value of like the S&P and the Dow. Are those dollars really worth what they were in January? Hypothetically, no.
Yeah, that's how a lot of people in the crypto space are thinking about this. The money supply has grown by, a material amount this year. I think a lot of people, COVID is a really hard thing for a lot of people, and this has been a tough time for a lot of folks. But I do think that COVID catalyzed a lot of the stimulus, obviously, and money printing, and I think it woke some folks up saying, "Hey, wait a second, is my purchasing power, being impacted by this? What implications does this have for my business?" For example, Michael Saylor, he's saying, "I'm sitting on all this cash, but it's..."
That's the CEO of MicroStrategy.
MicroStrategy CEO, yes, Michael Saylor. So, he's saying, I'm sitting on all this cash, but, it's depreciating. It's getting basically diluted away with inflation. It's cash is trash. So I'm going to buy Bitcoin with my treasury, and this is a better, use of our, of our balance sheet assets. So I think that, it's interesting, though. I guess some comments can be made about the size of the bet relative to their overall assets. For example, so there's this website, Bitcoin Treasuries, that shows the Bitcoins held by different companies. So they have MicroStrategy as the largest holder, Square.
I have it up here, right behind you.
Oh, awesome! So,
yeah, Galaxy Digital Holdings is number 2. Square is 3.
Yeah, so you can see that MicroStrategy took a pretty big bet.
Yeah, I mean, there's a lot on here. Like,
have you seen?
And
this
you
before?
didn't see this 3 years ago. This was not happening.
No, this is not happening.
I've not seen this
have
before.
You seen this before?
No.
And I think there's some like Mass Mutual is not on here.
Not yet.
I guess they're not.
Here, turn back to the mic for me.
Yeah, sure. So for example, MicroStrategy, they started entering the Bitcoin market shortly after all this money printing and stimulus started. So it's certainly not a coincidence, and there's something to be said about these type of folks entering, given the amount of given the kind of status with the dollars being printed and whatnot.
Yeah. The other thing here, though, is whenever you have something that is such a bold new idea, and this is, look, in the context of money, this is still a new idea. I mean, people say, okay, it's 11 years old. Think about how long trade systems have been around with currency as we know it, and how long we've accepted the fact that governments are at the center of this type of thing. What Bitcoin and the entire space is doing is they are basically taking a giant firecracker or dynamite and blowing up the entire thing and saying, no. Now the people are going to control it. And the people are going to be backed by the power of the internet, who's going to have this code called the blockchain that is able to verify everything that happens and take away all the bad actors that can happen in places like banks and, most importantly, in places like governments who control the vaults, so to speak, and control what is printed. What I think is a very interesting topic that is not talked about enough in this whole thing, though, that gets lost, is how money, like paper money as we know it, around the world, not just here, but back especially in the 19th century, and then in America up until 1971 or 1972, paper currency was backed by gold. So governments would have X amount of gold in their quote-unquote vaults, and they would issue paper currency that was redeemable for that gold. Not that citizens are going to go do that all the time, because you can't really carry around gold bullion and go pay for a coffee, but they had the option, and it had a clear value. And eventually, all these governments, especially around World War II or World War I in Europe, went off of the gold standard, and then the United States went off the gold standard in the 1970s. And basically what they were all saying is, okay, you see this paper currency? We're going to tell you how much it is. We're going to tell you how much of it we print, and we're going to tell you what it's worth. And don't worry, it'll take care of the rest. And Bitcoin basically says, all right, that's human error. We're not going to let that happen. This is what it is. This is the total amount, notwithstanding some of the potential that you were saying is at least whispered in some communities, like it won't stop at 21. We'll talk about that later. But this is what it is. Take it or leave it. And by the way, this takes away the inflation risk.
Certainly. Bitcoin is a non-sovereign store of value, monetary store of value. So no country owns Bitcoin, and it exists without the permission of any country, and that's certainly a big part of the innovation here. I agree a lot. A lot of that resonates with me.
Is there anything a government can do though? Is there anything they could? Because I know we're starting to see like regulation pop up in the U.S. What is that? What's the story there?
So candidly, I haven't looked as closely into the regulation that recently came out from the Treasury yet, but this is yesterday actually. But it regards self-hosted wallets, and I'm kind of digesting these threads from lawyers on Twitter and whatnot, and trying to understand and get a better understanding. But I think to answer your question, I think what governments can do to kind of hinder cryptocurrencies is kind of squash or put pressure on the on-ramps and off-ramps. So, ways to turn dollars or other types of fiat currency into coins or cryptocurrencies. So, places like Coinbase or Square. So, potentially, putting pressure on these types of institutions that are on-ramp, off-ramp, for turning fiat and crypto into vice versa. So, I think that's probably the main thing. Or just some sort of arbitrary harsh regulation that is just designed to hinder cryptocurrency. So but I think kind of putting pressure on the on ramps, off ramps is probably the first thing that any government jurisdiction is going to do if they want to make a point of it.
You bring up the fact there that in particularly they're looking at going after wallets, and that's another thing because everyone knows what a wallet is, but they hear it around crypto and they're like, all right, I don't totally get that. So my understanding is that there's two light, and I say my understanding because I never want to assume I know everything about any of this stuff because who the fuck knows? You do. But my understanding is that there's basically two potential levels of that. The first level is the one that you mentioned, like a Coinbase, where it is a company. Coinbase is a company that
I'll jump here in a sec. I'll
go ahead.
Finish.
Go ahead.
So I would break the wallets up into two buckets, and a lot of folks in crypto do the same thing. So let's call them, common kind of nomenclature is, custodial wallets and self-custodial wallets or non-custodial wallets. So a non-custodial, so the kind of, important thing to know about crypto is it's a bearer asset, meaning
a bearer asset.
Bearer asset. So you have if you have a self-custodial wallet and you have a private key. That's basically the secret that can access the funds, has the ability to spend the funds, can send the funds around. If you lose that private key, you've lost ownership of the crypto.
And we, by the way, estimate that as much as 10% of Bitcoin is gone forever because people lost their private key in various ways, whether it be a fire to their hard drive or like they threw it out by accident or whatever, right?
Right. So, so that's kind of the, if you're using a non-custodial wallet, you own your own keys. You have that, private key. You can access it through your ledger, your software wallet. But you own that, and you have the ability to move that around and transfer that and whatnot. On the other hand, you have the custodial wallets and custodial services like Coinbase and Square, and most every institution, centralized institution. So when you have coins or tokens and whatnot in Coinbase, you don't have a private key. So it's kind of there's not your keys, not your crypto. So if hypothetically, if Coinbase had some huge catastrophic event happen to them, or maybe we won't use Coinbase as an example. Let's use Widget Exchange as an example. If Widget Exchange has some horrible catastrophic event, there's been some examples over the years. You have a exchanges that have not been solvent and went under, like Quadric or CX. So the folks
Mount Gox.
Mount Gox is the biggest one. So so if these exchanges go under, you don't necessarily have access to the coins. So with these self-custodial, non-custodial wallets, folks have physical ownership of their coins, and they own, they have complete control over them. And not that it doesn't work the same way if you have a custodial wallet. So
yeah, I'm an idiot. I have a custodial wallet, but yeah, this is something. Keep going on this, because this is something that people need to hear, because you want to take away. You're already taking a lot of responsibility for yourself by getting a currency outside the system, but you also don't want to. You don't want to add more risk to your situation and then be able to potentially lose it through no fault of your own.
I think, this is something that a lot of people get hung up on with custodial versus non-custodial wallets, but candidly, I don't know that, maybe some of the institutions coming in, their mandate doesn't allow them to do self-custody generally. So they need to use a third-party custodian where they can put the coins, folks like Coinbase Custody or, BitGo or other custody providers. There's a number of them. Fidelity, so they can custody the coins with them,
and then just hope that they don't get hacked. Hope that nothing bad happens. Where, as you mentioned, like a run happens on one of those companies, and then they don't have the assets to be able to give you your Bitcoin.
I guess my point there was that a lot of these institutions that are coming in, like, probably they can't self-custody, and they probably don't even care about self-custody. Like, they're in crypto to make money or, generate returns, generate yield. So I think that this kind of self-custody, topic might be, kind of overblown with, thought of, as really important with, like, kind of the early movers, but, like, the kind of next wave of folks that are entering the space, like, they might not care as much, or so it's interesting concept. But my understanding is that the new regulation from the Treasury has to do with self-hosted wallets, aka non-custodial wallets. Mm-hmm. So it's designed to somehow impact.
Yeah, have you read what's his name, Ben Mezrich's book, Bitcoin Billionaires?
I actually have not read Ben Mezrich's book, Bitcoin Billionaires, though. I think very highly of the Winklevoss twins, and want to read it.
Yeah, you can read it in a few hours. It's not long, and I think it's something that if you are at all interested in this stuff and you know nothing about it, that's a great place to start, because Ben Mezrich, people that don't know, he's the guy who wrote The Social Network. He wrote the book that became the movie 21, where the MIT students went out to Vegas and like actually bet for real. He's written a whole bunch of other stuff. Like, he's got a long, long list, and he's an incredible writer. But he wrote this book, Bitcoin Billionaires, I guess last year, 2019, that was an unintended spin-off of The Social Network, actually. Sure. As you mentioned, Cole, it involves the Winklevoss twins, who some people remember from the movie where Armie Hammer played the two of them. They were the guys who were claiming that they had been a part of the invention of Facebook, and Zuckerberg said no, and Zuckerberg ended up winning out. And they were very easy to make fun of in pop culture because they were these tall, good-looking men of Harvard, all that stuff, whatever all that bullshit was. And so they did get made fun of a lot. And then they were the enemy of the most powerful guy, or one of the most powerful guys in tech, technically, after they ended up settling the lawsuit they had against Zuckerberg back in 2008. But this book, where Mezrich went back and covered them, takes you through the years immediately after that settlement in 2008. So they settled, I think it was for $65 million, but they took $45 million of it in stock, in Facebook stock. And they took all this public making fun of them and everything, just completely took it on the chin, no problem. And they ended up, through a whole bunch of trap doors, getting into the Bitcoin community just on a total off chance very early on, maybe 2011, something like that.
Yeah.
And so they realized what the power of this was, and they looked at it like, oh my God, we were there and we felt like we got fucked out of being a part of running the first real social network, but now we're there for the other social network that has actually been around longer than anything else, which is money. Yeah. And when you go through this stuff and see what they did, I mean, I assume you're very familiar with their work in the space, obviously?
Yeah, certainly. So I think, as I just mentioned, I think very highly of them, and I think they're super interesting folks. But yeah, from my understanding of watching a few interviews with them, as they entered the space, started buying a bunch of Bitcoins around $100 or maybe high single digits, I think. Yeah, they made a concerted effort to buy a ton of Bitcoin. And yeah, it's obviously appreciated materially since then. They also have an exchange business called Gemini, but
and that's specifically involving all crypto, right?
Right. So Gemini is a crypto asset exchange. It's actually, I think it's a New York trust company. So it's one of the more regulated exchanges, and thought of highly for that. But yeah, it's an exchange similar to Coinbase or Kraken or a number of other exchanges. But yeah, they own a ton of Bitcoin, and I think their thesis largely is around digital gold. So they compare Bitcoin to gold, and I think my understanding is that they have been comparing Bitcoin to gold for a number of years. It's kind of always been their thesis, and they kind of stack up Bitcoin against this $9 trillion gold market cap. So if you do some quick math, so if you have, well, I guess
we're at 400 billion right now for Bitcoin, and then it's
right,
9 trillion for gold. So it's still early ball game in that scenario.
Yeah. So if you kind of use gold as a comp, then Bitcoin has an order of magnitude or so more upside. So for that's kind of how I think kind of that camp of folks is thinking about things. But I think that they've done a lot of great work for the space, and there's certainly it's a small space. It's early. The market cap's only 400 billion, but it's if you compare it to the internet or something like that, the growth trajectory, I think it's still very early on. So
I agree with you.
We'll have to see how the next few years unfold, but I'm very optimistic.
Yeah, and I think one of the big supporters of your argument that it's very early on is because people who are now still sitting at home 9 months later, 10 months later into coronavirus are looking around looking for the next stimulus check, and I don't blame them. I mean, we got the little bump up front. What's $1,200? And they're still looking at it like, oh, the dollars are going to kind of come in and save us. And again, don't blame them, but that just kind of goes to show you there's not enough people who are looking and going, wait, hold on a second. I'm still being told to sit at home by the government here. Maybe I lost my job. I don't have money coming in. What is my money even worth at this point? Did I lose my house a lot of people are thinking that, all right, I might be out of the house I was in. All these basic things are happening to them that are pulling their whole life down, and they're still not realizing that, hey, part of it is the fact that whatever number is still left in my bank account ain't worth much, or it's not worth nearly as much as it was. And so when you say it's early days here, yeah, I mean, there's a reason why there's still crypto Twitter, right? There's still
Sure.
Bitcoin Twitter. There's still Ethereum Twitter. There's still all these quote unquote little communities, because it's like for every, I'll throw out a random number that's not real, but just to make the point, for every 100th person maybe that's the person that actually is somewhat aware of this stuff. Well, there's 330 million people in this country, to say nothing of the world, and 330 million people do involve on trading money. So you can't just have 1 out of 100 aware of this stuff for it to actually be mainstream and to be an accepted form of currency. So when you say we're early ball game, we are, because no one's looking at it that way. But the second level to it is the other point you make about looking at Bitcoin as gold. And so we know, I think we talked about this earlier too, we know that gold itself is not used as a currency, but historically when it was at its best for what it's supposed to be used for, it was used to back the currencies.
Sure.
So we need something that's easier to go around. So what I want to move this to is stuff you've already floated into a little bit that I pulled you back into Bitcoin just to keep it simple. But you keep on talking about Ethereum, and this is your world. Now, obviously, Bitcoin's your world too, but you focus heavily on DeFi, which is decentralized finance. I think you said that too. But explain to people first what Ethereum is, and then the second part, also explain how it integrates in a world with Bitcoin, or does it have to be one or the other?
Sure. So, great question. So Ethereum is a platform, a smart contract platform. So what that means is it's a platform for creating autonomous and unstoppable applications. So once an application is deployed onto the Ethereum mainnet, it's there forever.
And how do you do that?
You can do that a number of different ways, but basically by taking some Solidity code, which is the smart contract language, Ethereum smart contract language. There's also another one called Viper that can be used, and take the Solidity code and use an IDE like Remix or another tool to deploy that to the mainnet. So
can I pull this back to English real quick just to keep us on track?
Yeah, sure.
So if I know a coder, I'm a normal guy.
Crypto is, and a lot of other softwares are open source. So there's a lot of great examples out there already. So you can find on GitHub or pretty easily with a Google search the code that you'll need to deploy a token, for example. So once you have that code, you can maybe tweak a few different parameters. So maybe change the token name, the symbol, a few other things. And with a limited amount of changes and pretty, basically a copy and paste, can deploy this token onto Ethereum by, using this IDE, which is Remix. So using basically a tool to deploy to the network and paying a small amount of ETH for the transaction fee. So
and that's called gas.
Yeah,
right?
for gas. Yeah. So for every transaction in an Ethereum network, user or some network participant is required to pay some small transaction fee in ETH. Basically with Ethereum, anyone anywhere in the world can deploy an application that's powered by smart contracts with just a little bit of Ethereum and a little bit of Solidity code and Remix IDE or something. So
and when they do this smart contract, if I'm just going on there to do it, it could be something like, let's say it's you and me. So Julian and Cole are going on there to write a smart contract onto the Ethereum code or blockchain. It could be me saying, Cole, this contract, I'm going to agree to pay you $50 on the first of every month for 12 months. We're going to code that in, and then once it's on there, that is the agreement, and it's set, and it can't be changed, and it's publicly accessible to be able to say that it happened.
Exactly. So, let me explain how that kind of contract could work. So, say you had, $1,200, and you said, okay, Cole, I'm going to pay you $100 for the next 12 months. So I'm going to pay you on the first day of every month, $100. So after 12 months, I'll have paid you all of $1,200 I have. So Ethereum smart contract developer or whoever could write a smart contract that says there's actually a protocol that kind of does this already, but you basically could deposit, or a user could deposit their $1,200 into a smart contract and basically stream the money every first day of every month. So every certain amount of time that happens on the chain, the money will get sent on roughly the first day of every month. So basically, kind of codifying, these, different, interactions with smart contracts. So once you or a user put the money into the smart contract, it could be streamed, to another user or myself. So, that's kind of a simple example.
Now, to push back on that, some people may say right away, why can't we just do that on our own or do it through a bank like we always have? What is the upside there to having to go code something on the Ethereum blockchain and using Ethereum, using ETH along the way as well, just to do it?
Sure. So there's a protocol out there. It's a pretty well-known protocol, but called Sablier protocol. So this basically can be done already with something that someone else built. So it's kind of an application that someone else built that can enable this type of transactions I just described. But say you want to pay a contractor that's in another country. Say they're in somewhere else around the world, and they don't have access to to Chase Bank or TD Bank,
Mm-hmm.
TD Bank or something.
Yep.
So you say, okay, I want to send you PayPal. I want to send you $100. But they say, oh wow, there's like a $4 fee. I've just lost 4%. Like that's not great. That's 4% of my of my earnings. From what you're paying them for. So they say, wow, that kind of sucks. If there's a better way. So well, there is a better way. It's crypto and Bitcoin and Ethereum and stablecoins. So, yeah. So the advantage is that users can send money to each other,
and it's instantaneous. The fee, the gas in this case, as we called it, is significantly less than 4%. It's like usually, actually, I don't want to speak out of my ass, but it's low, right?
Generally, yeah. It's generally low.
And you also point out the problem, and people don't realize this, especially in this country. We don't think about this as much, even though there are some that this applies to in this country, unfortunately. But there's, I believe, last statistic taken, it's like there's 1.7 billion people around the world who do not have access to a bank account. So that's, you got 7.5 billion people in the world. That's a significant number, and it presents a lot of problems for them to be able to transact in a modern economy when, in fact, a lot of these people do have access to the internet.
Right. That's where I was just going to jump in. So a lot of these folks that don't have access to bank accounts, they do have access to mobile phones and other things. So they can very easily have a Ethereum wallet or a Bitcoin wallet. While it's this big lift to get a bank account. So at its essence, Ethereum and DeFi enable financial services for everyone around the world. It's super amazing.
You use that Sablier example though, and one of the things I don't understand about them, and to be clear, Sablier, how would you define that? Is that a protocol?
So it's a protocol built on Ethereum. The way they kind of frame it is like streaming money. So
is Sablier a company?
It's more like an app. Like it's kind of like an open source app that I don't think it's monetized I don't know how they monetize it. It's kind of just like software.
But the thing that I wasn't fully sure of there, I get it in the sense that it allows instantaneous payment when a lot of payments, especially international, can take a week, 2 weeks, whatever. You have currency risk when you do it. You also have more fees. I get all that part of it. But there's also, they talk about the concept of like a minute by minute payment. So like if I'm a contractor and I say, I'm going to do consulting work on X for you for 2 hours. If I only do 90 minutes or something, then I shouldn't be paid for 2 hours. And so something about Sablier tracks that. That's what I'm confused.
Yeah, basically it's like getting paid in real time via some smart contract that's kind of streaming money pro rata in real time. So that's kind of the kind of concept going on there. There's definitely some ways that folks can play devil's advocate on with this. Saying like why can't I just send money? But I think it's predictable, and just kind of an example of how smart contracts can be used.
How long has Ethereum been around?
So Ethereum was conceptualized in 2013, I believe it was 2013. The token sale or fundraiser took place in 2014,
and that was for ETH. Right.
For ETH, yeah. Actually, I need to double check those dates, the years. I always forget, actually. But anyways, Ethereum popped
up. That's what I'm here for.
I don't know why worked full time in the space for a number of years, but I always forget the exact timeline.
You've forgotten more in about a minute than I've known in my entire life, so we'll take it. So it was proposed in 2013 by programmer Vitalik Buterin. Now that was the next question. So we know who created this, and you've met Vitalik, I believe, right?
Yep, met Vitalik a few times. Anyways, so Vitalik is a really smart, cryptocurrency entrepreneur, obviously. So he originally was hacking on Bitcoin, and he realized that Bitcoin, the programming language for Bitcoin and just Bitcoin largely was not expressive enough to build the type of things that he thought that he could build. So basically Vitalik went out and said, okay, well, I can't build these awesome things I want with Bitcoin, so there needs to be something else. So that's kind of the advent of Ethereum. So
when he says build, I just want to make sure.
Yeah, so he was basically trying to build applications that, involved, maybe something that looked like a smart contract, something like this. But Bitcoin, the infrastructure of Bitcoin and just what you're able to do with, Bitcoin script, which is this programming language around Bitcoin, was not expressive enough for him to build, these type of applications he wanted to build. It was kind of limiting, and basically needed some, a more generalized, platform like Ethereum with smart contracts. So that's kind of, the origin of it.
Right, because Bitcoin is basically strictly the Bitcoins that are created that are literally viewed as some sort of value that people agree upon is going to be X value. In this case, it's traded relative to dollars that people can see as far as like the main currency that they can judge it against. And so when it comes to other things like creating derivatives, lending out money and writing code to be able to do that, insurance, creating investment products, which derivatives are investment products, but I'm saying like actual exchanges, ETF-like things. You can't do any of that on Bitcoin. So Vitalik looked at this and said, okay, I want to make an ecosystem where you can do all of this, and underneath it, it's backed by its own quote-unquote currency, which will be a cryptocurrency, and it'll be Ethereum. Now, my question is, does Vitalik, I definitely saw this somewhere, but I can't remember right now, does Vitalik still believe in Bitcoin as well? Does he think they can both exist together?
Yeah, it's interesting. So I think I can't speak for Vitalik, but I think that you're
on a first name basis with him. I love it.
Not really, but he's V. So I think that personally, I think Bitcoin and Ethereum definitely coexist. So I can basically point to one example that really stands out. So there's something that's popped up in the last last 2 years, so called WBTC. So WBTC is short for Wrapped Bitcoin. And what Wrapped Bitcoin is it's basically a token on Ethereum that's backed by Bitcoin. So it's a collateralized Bitcoin on Ethereum. It's a token that's collateralized by Bitcoin that is on Ethereum. So so there's now about $3 billion of wrapped Bitcoin on Ethereum. So that's basically that's around 1% of the supply of Bitcoin.
So that means that people came in with Bitcoin.
Yep.
And they put it onto the Ethereum blockchain.
Yep.
And then they used it. They borrowed money to then be, or loaned out money.
So
in a different form.
Kind of. So it's more like they go to so there's like, I think the way WBTC did it was they had like these merchants that basically could take Bitcoin and wrap it into WBTC. I think they had some maybe some regulatory those merchants kind of went through some onboarding process and whatnot. But basically folks took Bitcoin, vanilla Bitcoin that kind of just, exists, maybe in, their whichever wallet, and they took it and they wrapped it on Ethereum. And then from there, the Bitcoin that's now on Ethereum, now WBTC, can be used in all of these different DeFi applications. It can be used as collateral to borrow stable coins. It can be used as, you can use that Bitcoin to provision liquidity to an exchange. You can use the WBTC to do a number of different things. So I think WBTC has a lot more utility than BTC, and it's actually pretty interesting that there's $3 billion of WBTC now, and I think that's only going up. I don't see there's you can earn yield on your Bitcoin,
because one of the problems with Bitcoin, quote unquote, is that because you need miners to confirm the transaction, there is a limitation on speed as far as like how quickly you can transfer it. Now, is it better than like I always use the example, if I'm a car company and I have a plant in Mexico City and a plant in South Korea, moving $1 billion between Mexico City and South Korea is a bitch. I mean, it could take, even if you're a powerful company, it could take 5 days. You got to bring in Wall Street to hedge against the inflation risk, or not the inflation risk, the currency risk.
Sure.
You got to bring in banks/Wall Street to actually execute on the middle. You got to bring in governments who have full view into all transactions and decide to take their piece, all that stuff. But with Bitcoin, even though it may be faster than that, it's still not like, it does not settle at the rate and precision that things like on Ethereum can do.
So there's an Ethereum block every 6 minutes or 7 minutes.
What does that mean, an Ethereum block? I know what that means, but let's just define it.
So it's it's basically a new block that's a new copy of the ledger that basically all the new transactions have been added to that block.
So anyone that coded on the Ethereum blockchain and put a smart contract on there, like we talked about, is a part of that block. Whoever did it over a 5-minute or 5-hour or whatever it is span that block took part.
Sure. So yep. Any new transactions, any new contracts deployed, all of that type of stuff would be included in a new block, and that's basically recorded in the blockchain. So any new block is kind of a new piece of history, new recording in the blockchain. On the blockchain that's getting added to this permanent ledger. So basically what I'm getting at is that Ethereum has produces blocks more frequently than Bitcoin. So as to say, it should be faster. Now Ethereum can get congested at times. There's a lot of users. So I guess it depends on the amount of usage on the network, but overall, Ethereum is generally faster than Bitcoin, and there's a lot of efforts around scaling it even further. So you have things like layer 2 scaling solutions, and I'm getting really down the rabbit hole here.
It's okay.
But
keep going.
Layer 2 scaling solutions are basically a solution to scale Ethereum with kind of a different approach. Like I guess it's a lot of semantics at this point, but like state channels or plasma or ZK rollups, optimistic rollups. So that's a lot of jargon, but basically these solutions to make Ethereum faster and allow it to have greater throughput, these type of things. So yeah, Ethereum is definitely capable of being faster, and largely is faster than a Bitcoin.
And I have a question on this, and before I do that, I do want to. I feel like I should do this. I do want to disclose when it comes to my crypto assets. I only own two. I own Bitcoin and Ethereum, and I'm about 94 to 95% Bitcoin and about 5-6% Ethereum. So obviously, my knowledge and scale of bet is clearly on the Bitcoin side, and Ethereum's still something I'm reading books on and learning a lot about, and it's very, very interesting to me. But you talk about the idea that you get this continued adoption, continued use that also then has smart minds coming in there and building new smart contracts to basically solve for previous holdups and holes that occurred as you were getting adoption. So maybe things weren't settling fast enough, and guys come in and specifically write code to be able to then settle things faster in the future. Basically plug any holes in the boat. I get that. Where Ethereum certainly has a downside in my mind comparatively, just in how I can picture it, is the fact that there is technically no limited supply. So you don't have a cap like Bitcoin has a cap. They create a literal value of it's not going to go past 21. And I know we talked about the one scenario where it could, but for all intents and purposes of the argument, that's not going to happen. It's written in. Ethereum doesn't have that.
Yeah, so while Ethereum doesn't have a cap, there's this initiative happening, and I'm kind of getting a bit granular here, but called the EIP 1559. And what's going on with EIP 1559 is that it's basically a proposal so that every time Ethereum transaction occurs, that a little bit of ETH gets burned. So basically, it's a value accrual mechanism that's going to be added to the Ethereum protocol. So this is really promising because if there's a lot of transactions happening on Ethereum, a lot of ETH can get burned. And this could actually result in a negative issuance for Ethereum if there's enough transactions and whatnot going on. So in that case, Ethereum can become more scarce and more deflationary than Bitcoin.
And you also think, though, that scarcity doesn't necessarily imply value. That was something... That was an interesting point to me because you don't hear people say that much. They say the opposite. They're like, the more scarce it is, the more I want it, which in theory is correct. But what do you mean by that?
Sure. So, anyone can mint a token that has 10 million tokens or 1,000 tokens. And, it's certainly scarce, but there's no network effect and nobody knows about it. It's not valuable. So that's kind of my angle there. Just because something's scarce, does not imply value.
Bitcoin got sold for someone sold 10,000 Bitcoins for 2 pizzas back in 2010. So yeah, it had a day where it had no network. It was a joke on deep web internet feeds, and it had no value. And eventually, and we talked about it doesn't have enough adoption yet, which is true, but it actually started to get people in different places around the world to be like, ooh, I get it. I'm a part of this. I'm in this community. So you built up a big enough base that now you have... I'm pulling this from my photographic memory as best I can. I think there's like 70 million people around the world who own at least some Bitcoin at this point. So you have some network effect there. So that scarcity then creates value. Whereas to your point, if I just create a token right now and say there's only 10,000 of them, I got to get people to fucking buy into it.
Yeah. So, scarcity matters when there's network effects and demand, but if there's no demand, then scarcity is just not really important. But yeah, so certainly scarcity is definitely the value propositions of Bitcoin. There's only 21 million, and it's provably so. So I don't think scarcity is it's certainly important and interesting. I just think that a lot of folks kind of get caught up on it maybe too much and think less about payments around the world or store value that non-sovereign store value. Like these things excite me more than that.
Well, this also, you talk about like people who pay attention to one thing, in this case scarcity, and look, that's one of the most common champion thoughts in the Bitcoin community, obviously.
Sure.
But you're also wading into a territory that's important, which is the tribalism that's been created in this. So when you look at the fact that throughout the 2010s, for most of them, until maybe 2017, where you got a small level of awareness and adoption, you had a long period of time there where there was only certain individuals who were in the know and who were in these communities, and they were the earliest adopters, right? And we're still in an early adopter mode right now, but these are like the earliest of the earliest. And so as other ideas started to rise up, whether it be Ethereum or XRP or Litecoin or all these, and then all these shit coins that came up that were trying to solve for inefficiencies that they identified on Bitcoin, in some cases where they wanted to take out Bitcoin, in other cases where they wanted to maybe support it and be another value add. As this all happened, you created all these teams, especially obviously online, where people pick their squad and they live or they die with it. And so especially on Twitter, it's the best example to use because it's where a lot of people within crypto go to communicate, but you could say Reddit too. You see these communities on crypto twit as an example, which is like its own big space, but then within it you have Bitcoin Twitter and Ethereum Twitter and even like XRP Twitter and stuff. And all these people who live in these echo chambers and just yell bang, 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 bang about their currency. And then it's not even like a discussion with other tribes. It's not like you don't see as many people. Like you're a guy who legitimately is just all about the space. It's a beautiful thing. It's why I like talking with you. But there are so many people who are like, yo, fuck Ethereum, or like, yo, fuck Bitcoin, or like, yo, fuck XRP. And there's no ability to hear anything else. And it's scary because then you have to remember there are people who are just coming into this space who are trying to look at a new way to do money. And they come in and they're like, wait, why are all these people fucking fighting about this shit? Like, I just want to know what's what.
Yeah, I think the tribalism, on Twitter, maybe it just there's a lot of, noise, but, I think that there's still a lot of building and, interoperability between these different protocols. So I think, a lot of folks realize that we need interoperability between protocols. So if you think of the early days of the internet, if you think of like Gmail and Yahoo, or something like that, like Gmail and Hotmail, AOL and Hotmail. If these email clients could not communicate, the network effects would not be nearly as significant. So if you could not send email from Hotmail to AOL or AOL to Yahoo, the impact that the network effects and the overall scale of this would just not be the same. So I think similarly about crypto is that value flowing from these different blockchains, different networks. It'll be good for them to interoperate and probably necessary. So while there's like this kind of tribalism like online now, we're all working towards this kind of like sovereignty and the bigger picture. So day to day, I think folks can get caught up in the tribalism, but the bigger picture is that we're kind of all on the same team and growing this ecosystem.
I think there's a big thought in there of people taking the Peter Thiel 0 to 1 concept of monopolies are good, and that's what there needs to be. There needs to be, and there's a lot more detail to that. I'm not going to go down there, but the basic definition was that like competition is actually bad if like someone's not winning, because there needs to be a clear main winner of value. As an example, obviously Google is the clear main winner of value when it comes to search engines, among other things. And you even pointed out like Gmail versus Yahoo. There's a lot more people with Gmail now than Yahoo because Google created a better product, at least in the eyes of a lot of people. So I think when I look on like, I love being 3,000 feet or 30,000 feet in the air with like the crypto Twitter. I look at all of them and it's just funny to me. But when I see these people, I think they're so worried about the fact that it's like, oh, well, if we don't win all out on whatever it is our team is, whether it be, Ethereum, Bitcoin, XRP, the Link Mafia, like all these people, it's like, then we're not going to have anything. Like there can only be us or nobody else. And that's where, especially Ethereum, and that's why I asked about this earlier, that's where Ethereum is just so interesting to me because, again, you said you didn't know where Vitalik stands, and I don't know either, but he's just a creator. He created this open source product. To me, it looks like it can be something that is built with Bitcoin in the ecosystem, and then taking that to the next level, because Bitcoin is it is a one-dimensional idea, which I think is what makes it great, by the way.
Yeah, I agree.
It creates that whole concept of like, oh, is Bitcoin just a way better, even more scarce gold with mass adoption where people really believe in it? And then again, when I see like 70 million people around the world owning it, it's like, and that I think the numbers, as of like a couple months ago, the numbers near 70% of people have held their Bitcoin for at least a year.
Yeah, that's interesting.
I mean, that's a beautiful thing, because that means people are like, oh, I'm viewing this as not just like a hedge against inflation, but I'm viewing this as like a long-term asset that I want to accrue to be able to protect myself against bad actors among humans, which happen in governments more than anything.
Sure, yeah. I think you make a lot of interesting points there. Yeah, I've seen a bunch of analysis on like how frequently Bitcoins move and similar analysis for Ethereum. And I think that analysis is very interesting because you can get a sense of the long-term holders and, how many of them there are, how many coins are, moving, kind of like these type of things. So namely, I've seen there was a good report a while back from this research shop called Delphi Digital about kind of like these kind of like, I think they were calling them like hodl waves or something. So like how long folks were holding their coins for, which I find that research really fascinating. But yeah, yeah, it's certainly a space that is growing, and I think we'll see Bitcoin and Ethereum continue to hit back on the other point. We'll see Bitcoin and Ethereum continue to kind of coexist and work together. I think all this Bitcoin on Ethereum on WBTC, and a large amount of that is in DeFi applications. Like this is really powerful, and I think this is just getting started. So it's hard to say how early we are in DeFi, but if I had to compare like where DeFi is in its growth to Bitcoin, it's got to be like 2012 or 2013, something like that. So I think it's obviously early for crypto as a whole. It's super early for DeFi and Ethereum. So I'm more optimistic on about the space than ever before.
It is amazing how quickly this is happening in context. I mean, to your point, even seeing something like Ethereum have the overall adoption it has now. What's it at? Like in the collateral side alone, it's like 1 point something billion locked in, or 2 point something billion locked in.
Yeah. So now on the DeFi side of things, there's we can check DeFiPulse.com, but I think there's like 15 billion locked in DeFi apps.
Wow.
And the market cap of Ethereum now is
That's
like,
all DeFi apps, though.
that's all DeFi apps.
Right.
Built
The
on
collaterals, though, itself, like meaning people putting up money, is in like the 2 billion handler or something.
So yeah, I mean, no. So it's putting up collateral is a synonymous with the DeFi app. So basically, all that 15 billion is effectively collateral in different apps. Some of it is like collateral and exchanges, but yeah. It's so pull up DeFiPulse.com.
Yeah, all right. I totally missed the boat there, because I thought that like when we're looking at things like some of the like investment vehicles on there, for example,
Pull up DeFi Pulse and we can go through that. Like that could be a good exercise.
I thought that was a separate count, so I didn't know it got that high. It really exploded this year.
Yeah. So wow, 16 billion in DeFi.
Yeah. Sorry, I misspoke big time.
No worries.
That's why we check this stuff.
So the number 1 is Maker. Number 2 is WBTC.
And what's Maker again?
So Maker is the DAI stablecoin system. So it's basically the synthetic dollar, aka DAI.
Okay.
That's
let's talk about that.
Collateralized by ETH. Yeah, sure. So Maker is one of the earliest Ethereum apps or DeFi apps. It's kind of started before the word DeFi was like, the term DeFi was like even kind of even a thing. So they've been going for a while, but basically what they've built is this system, kind of like asset-based lending system. So their system allows users to post collateral, so they can post ETH, WBTC, which we just talked about, a number of other different types of crypto assets, and they can post that crypto, as collateral to the protocol, and they can borrow stablecoin DAI against it. So basically, the users, they always need to maintain a sufficient collateralization ratio that's slightly over collateralized at like roughly 150%, 130%, so that the value of their debt does not exceed that collateralization ratio.
All right,
So,
2 questions. First, you said that DAI is a U.S. dollar-backed stablecoin. So first, say what that means.
Sure. So DAI is actually not a fiat collateralized stablecoin, meaning there's not dollars in a bank that correspond with the DAI tokens. DAI is actually backed by ETH. So through this mechanism, DAI. So basically, DAI is backed by ETH, but it's pegged to the U.S. dollar. So it's a synthetic dollar. So there's other stablecoins out there like USDC, the Paxos stablecoin, Tether, that are actually backed by U.S. dollars and cash equivalents. So those are fiat collateralized stablecoins. DAI is a crypto collateralized stablecoin, and it exists entirely on chain. There's no bank account that USD is deposited to, and a corresponding DAI is minted. So
okay, let me pull this back for a second, because I don't want to go too deep and lose people. When we're saying collateralization, let's use an example that a lot of us can understand. If I agree to take on a mortgage, right? Yeah. I buy a house, maybe I put some equity in and I put a down payment in up front, and maybe I put a 20% down payment, and then there's 80% left, and that becomes my mortgage. That mortgage, the bank having paid for the house up front in order to get paid the mortgage with interest over time, the collateral is the home, because if I don't pay it, they take my home. So on the Ethereum network, let's talk about collateral.
So let's use like a home equity loan as an example. So if someone has a home and they want to borrow some amount of money against their home to finance something or something like that, they can go to I guess a lender like a bank or another lender, and they can say, okay, I'm using my home, or whoever issues these home equity loans, but some agency or something. So they can go to these these entities and say, okay, I'm gonna borrow against my home with this home equity loan. So I guess it's a similar concept, with crypto. So if someone was to say, okay, I want to borrow against my Bitcoin or I want to borrow against my ETH. So, home is an example I'm using, but I guess any asset that can be posted as margin or collateral somewhere could fit this bill. But that's kind of what I mean by posted as collateral. So basically, when I say posted as collateral, a user is depositing those tokens or that Bitcoin or that ETH into a smart contract on Ethereum and can subsequently do something with, they can borrow against it or do something like this.
So if they borrow against it, they are able to access the funds they receive back. And we started this example with DAI in that case, but they need to have upfront 150% worth of what they borrow. So maybe they get, I'm just using round numbers, maybe they put up 10 ETH and then get 7, and I know this isn't the exchange rate, but they get 7 DAI back. They only now have access to that 7 DAI. So what is the need for them? What is the impetus for people to want to put up collateral?
Yeah, sure. So the impetus is that someone wants liquidity and they don't want to sell their underlying collateral. And this could be for a number of reasons. So they might want to be long that crypto. They think it's going up. They don't want to sell, so they can draw some stablecoin against it, borrow stablecoin against it, and they can get liquidity that way. That's probably, in one way or another, getting some sort of liquidity is kind of what's going on. Whether they're using that liquidity to actually buy something, say someone has, $100,000 worth of ETH and they want to buy a car, they can, they could put that ETH in a maker, CDP, also known as Vault, and they could, borrow DAI against it and go purchase something with it. At the same time, they could also borrow DAI and swap that for ETH and basically get levered long ETH. So I think there's a number of reasons someone would want to use Maker or another similar service. And I will say all of this stuff can be done on Ethereum with no third party, no permission, no authorization from anyone else. So these financial products are publicly available on the blockchain. It's a really interesting concept.
Now, the second layer to it is the value of doing this over doing it in traditional systems. So in a previous life, I was a banker, as you know. And so with some of our clients, a very common thing I would do with a lot of guys was what was called a loan management account. And the way it worked was it was basically a bridge loan for as long as they wanted it. And it operated at LIBOR plus or prime plus a couple points, depending on how much assets they had with the bank, how much in assets they had with the bank. And I'll just use an example to explain how this worked. One guy, he bought a home in California, and the cost of the home was like $18 million, and then he immediately wanted to knock it down and build a new home. And the entire project to do it was going to cost like 24 or 25 million. This guy was worth hundreds of millions of dollars. So no problem. He could pay for that, but had a lot of money tied up in businesses, right? Because he owns some rather large companies. And so he didn't want to just pay the 24 million, or he didn't want to take a traditional loan on it as the other side of it. So what he said is like, I'm thinking of just paying this eventually, like when I want to, but can I draw against assets I have and just get like a bridge loan? This is where the LMA comes in. So he needed, call it a $24 million bridge loan, said, fuck it, I'll pay half up front, pays 12, leaves 12 left over. So we take an account where he's got, say, all stock holdings in it, right? All equities, U.S. equities. And it's worth maybe, I don't know, 15, 20 million in that particular account. We take that, allow those investments to still exist, and we collateralize it. And so we say, you're going to put that up as guarantee of payment, meaning you also can't have the stocks fall below a certain level. Otherwise, you're going to have to pay back into it as well to whatever. And in the meantime, you're just going to pay a monthly interest rate until you pay this back. So maybe the interest rate at the time is like, he did it at a really low time. Like maybe it's 2% or something. So he just pays on an annualized basis whatever 2% divided by 12 is a month. And then one day, maybe 9, 10 months later, he called up and said, all right, I'm paying it off. Done. And it's taken away. It's pretty easy. Now, he's also very wealthy. It's easier for wealthy people to get access to vehicles like that. But what is the value of going to do this on the Ethereum blockchain versus like just going to do that through a bank? And trust me, I'm not the guy that's arguing for banks. They're fucking sausage factories. But.
Yeah, so there's a number of reasons someone would want to do this, on the blockchain versus or on Ethereum versus using a traditional financial services business. So, first things first, like let's just use an example. There's a crypto whale. They have $50 million in ETH. They have other assets, but like their ETH has appreciated so much that it's majority of their net worth at this point. They leave it in ETH because they want the upside of they think ETH's going up. They also don't want to sell for fiat and incur these huge capital gains and whatnot. So this person says, okay, like I have all this ETH, but I need some dollars. I have some stuff to buy. Have obligations. So yeah, I mean they can put this in a CDP or other DeFi platform, and they
CDP.
So it's basically the old terminology for the maker position. So it stands for collateralized debt position, but they're now calling it Vault. It's more the more cute name.
One more time, maker. You've said this like twice now. I just want to make sure it's officially defined.
Maker DAO, or also known as Maker, is this system that is effectively the DAI stablecoin system where the stablecoin DAI can be minted against collateral that's posted to the protocol. Okay,
so it's a digital autonomous organization that operates exclusively within the Ethereum network.
Yeah, so it has DAO in the name, but there actually is a foundation.
Decentralized.
It's
autonomous.
not. Yeah, sure. So it's not fully decentralized at this point, my understanding, but it could be in the future. But yeah, so it's honestly very similar to what you described with your your previous customer. It's very similar, but it all happens in a trustless fashion and can be crypto collateral instead of Spider. It's there's a number of reasons, but how long did it take for you to do this deal with your?
No, that's the other thing.
How long did it take?
And we did it fast. We did it fast, but probably about a week turnaround.
Sure. So someone with So I'm gonna make a point here. So someone with all of this crypto can get this loan, stablecoin loan, in a matter of minutes for any amount of money. It's a really mind blowing concept where not only financial services are now available to the kind of crypto economy, they're also instantly available, and no third party is required to to give permission to use this. So it's pretty wild. It's definitely the first time in history that there's been this kind of instantaneous like liquidity that's able to be generated or drawn against crypto collateral or other types of collateral. So there's a number of reasons someone would want to use Maker or another protocol to finance something versus traditional bank. But there's also probably an argument that can be made for why someone who has an existing banking relationship and whatnot might want to use that versus a DeFi protocol. So I think there's two sides of the coin here. I guess it depends who's looking to borrow. If it's someone who has a ton of crypto and doesn't have these like real world assets, like maybe it makes sense to use Maker. But if you have like tons of SPY or like something like in the legacy financial system that can be posted as collateral, like maybe you want to use like a kind of a normal banking.
And that's what crypto as a space does. And by the way, I should just mention this. Some people differentiate and say crypto for the entire community and then call Bitcoin something else. And I get that. But just for sake of when I say it, I'm just generalizing and saying everything in this space that started, quote unquote, with Bitcoin officially, I guess. But there's the concept within it that the rich get richer in the legacy financial system, and it takes money to make money everywhere.
Sure.
And so the idea of crypto is to take power of money to the common man, take away that same power we talked about where governments kind of fuck over the common man, and the common man's going about life and doesn't realize it through things like money printing and stuff like that. But also when you're talking about being able to transfer money fast, being able to access it, being able to do it without a central banking system. So yes, you point out that there are people, like the example I gave, who are already established elites in society in that case, and already have these accounts at legacy financial institutions and have the ability to get things through and be able to get systems that allow them to continue to make money on their money without giving up their positions and things like that through stuff like LMAs. But crypto is opening up the doors to everyone, and I don't want to get lost in the shuffle here, the sense that even that guy who has access to all that stuff could be helped with crypto type ideas as far as like speed of transfer, ability to leverage technology without the third party, meaning in this case the bank, and just a general better system.
Yeah, I think, DeFi is a step function improvement to the legacy financial system, where DeFi is orders of magnitude better than the legacy, that it's, what came before it. So, yeah, I think, all the points you mentioned are certainly valid. And, this is a better, faster, faster with layer 2, maybe not on Ethereum mainnet today, but, it's better in a number of different ways than the legacy financial system. So it's certainly really exciting.
Yeah, and we had talked earlier about some of the tribalism with some of the individual teams within crypto, but this is a concept that relates. It's not a concept that relates. It is the concept of groupthink. And that's where the danger is in the crypto community. But the far greater danger, in my opinion, to groupthink is within the legacy financial system. Because the legacy financial system is tied to the highest end of it, which is literally the governments. And the governments say what goes. They regulate. They do everything. They tell the banks what to do. And then when you look at the banks around the world, the big ones, the ones who actually matter, they're enormous corporations. And I'm not faulting them. That's what they are, though. They employ hundreds of thousands of people at each of these places. And so there's this guy who reports to that girl, reports to this guy, reports to that girl. I worked in this stuff. I see how this goes. Everyone's they're a little node on a machine, right? And they all have their little job, and they're self-interested in making sure they do it and don't fuck it up so they don't get fired. And so there's very little ability for creativity or thinking outside the box. On the contrary, when you give anyone access and power, anyone with an internet connection, access and power to be able to see how these systems work and be a part of it and operate within it the way that they want to, that also then can be a vehicle to put food on their own table, which is what this long-term process is supposed to be for the idea of crypto as a currency, right? You now take away that groupthink because you take away the institutions who control this stuff, who are living in a CYA, cover your ass society. That's the beauty of this to me. And so when I hear you talk about like DeFi as an example within there, and I see all the applications that dApps have on Ethereum, it's like, all right, I could see that in the sense that you are allowing all this talent from around the world to come in there and say, okay, we got an idea for this, so let's just do it. And let's do it on the thing that everyone agrees to. Anyone who can access it at any time, not just people in an institution, but the schmo sitting behind his iPhone in his living room can access and see how this works. It's pretty cool.
Yeah, it's really interesting. This is I don't want to be repetitive, but it's a 0 to 1 innovation. There's a lot of different angles where it's improving. It's more transparent. It's it's accessible. It's provable. It's all of these things. So I think it's certainly the thing that excites me the most about crypto right now, DeFi, and that I'm paying the most attention to. And that I think has a really bright future. So I think that it's early days. I think we'll see a few huge protocols emerge in the next few years. If I had to guess who it will be, one of them is probably Uniswap, which I'm happy to talk more about. Which basically
actually, please talk about them. They're very interesting.
So it's an exchange that uses this kind of this formula to maintain its price and kind of maintain its the whole system. So it's an exchange with no order book. It uses this constant market maker function, y times x equals k, to kind of maintain, the equilibrium on the exchange. But
if I were a third grader and I said,
So
what do
basi-
they do?
Yeah,
What's
sure.
the value to me? What would you say?
So the way Uniswap works is there's two parties. There's traders and there's liquidity providers. So what liquidity providers do is they take two tokens, so let's say WBTC and ETH, and they supply them to Uniswap. And one thing to point out is the guys and girls who wrote the Uniswap code, once they deploy the code, it's up forever, and they don't have any ability to change it. So they basically can deploy a new version and publicly say, okay, everyone should use version 3 or version 4, but they don't actually have the ability to backdoor the code, or they don't have any control over it once it's kind of out of their hands. So so there's these liquidity providers, and they provide liquidity, and the traders can swap through the platform. So basically through this y times x equals k formula, Uniswap's kind of able to provide pricing and automated liquidity that's kind of always there, and transparent and all of these things. So it's basically democratizing market making in a sense, and it also makes trading really simple. And so there's kind of two things going on. I'm kind of all over in this answer, but there's
It's okay. Keep
there's
going.
it makes trading easier than ever, and it also makes allows folks to passively earn fees from traders on their crypto assets by providing them to the protocol. So anyways, Uniswap has it generates a lot of it gets a lot of use, and the protocol generates like a lot of revenue on chain for itself effectively. So every day there's roughly $1 million spent on fees on Uniswap. So there's a website, I think it's cryptofees.info. And you can see this, and it's actually a lot of the times there's actually more fees spent on Uniswap than there is in Bitcoin. So Uniswap is super active application on Ethereum. It basically the amount of fees spent on different applications and protocols every day, it's basically Ethereum's number one, or maybe Bitcoin's number one, and then Uniswap's always either 2 or 3. So yeah, it's really interesting. I kind of feel that Uniswap it reminds me of like the early days of Facebook, whereas it's kind of like really interesting and kind of like, game changing technology and application. And everyone knew it was going to be big. It hadn't, the market cap and whatnot hadn't blown up yet, but I feel similarly about Uniswap, that the market cap of the coin is about 3 billion today. I think it, my personal opinion is that can grow orders of magnitude in the next few years. And yeah, I do own some Uniswap, full disclosure.
Yeah, thank you for that. And the thing about Uniswap, though, is they also, the organization that runs it or built it, operates out of New York City. And they opened up a new Pandora's box. I don't think like just as far as Ethereum goes, but as far as the system of crypto as a whole and what it's supposed to represent goes. And I think this was maybe a couple years ago or something, but the people who run Uniswap are based out of New York City. So they are then held to not just US, but New York City
Sure.
regulation. And so there was something with KYC, like know your client and stuff like that, where Uniswap had to block access.
Wow, you did your research.
In certain countries. Yeah, I saw this a while ago. So explain this and how they got around it.
Yeah, so there's two things here. So Uniswap, the smart contracts are publicly available on Ethereum, right? Those have been deployed and they're publicly available. The Uniswap team has also built a website or a front end to interact with those smart contracts. So someone who has a good understanding of Ethereum can, use the command line or more
Command line?
Command line is like the manual way to interact with the code, or so they can use a more involved method to interact with Uniswap without using Uniswap's front end. what most people do is they do use Uniswap's front end. Uniswap's built a really pretty interface to interact with the smart contracts, makes it really easy to interact with them. So what happened here is Uniswap's front end wasn't geo-blocking like some countries that were, I believe, sanctioned. So that's uniswap.org. So basically, Uniswap geo-blocked those countries. Now, folks, I'm not saying this is a good or bad thing. Now, folks in those countries, though, that they can still use Uniswap. The protocol cannot is an autonomous piece of software. It cannot discern someone.
That's what I mean. So they got around it in a way.
They geo-blocked it on their, or they blocked it on their front end, but the actual protocol they cannot control. They have no control over that. So, I mean, those folks in those countries technically can still use that. And now I'm not, I'm not endorsing that or anything, but I think that, yeah, I mean that's basically what's going on here is that they blocked it on their front end, but the contracts that are on Ethereum, those cannot be modified, so those cannot discern.
Right. Now, and again, like we kind of are hopping from some things to some things here and trying to hit some interesting points. And when you're going off about stuff like that, I just want to go down into it. So if there are some things that I'm saying in this podcast for people listening out there where it's like, oh, we didn't go back to that, I apologize. That's going to happen. It definitely has happened already. I just want to, when Cole goes with something here, I want to ride the wave. So with that, though, Uniswap being an example of something that's built on Ethereum. Again, we come back to the two entities here. And they're not entities, but I'm just going to call them entities, where you have Ethereum, which is the protocol, the blockchain, right? And then you have Ethereum, which is the ETH, which is the currency that you use to transact on all smart contracts of that blockchain.
Sure.
The currency itself is an investment to people, or I'm just using that term because people do buy and sell it who have no fucking idea what Ethereum is, including, right? But people go onto Robinhood, for example, and they can buy Bitcoin and they can buy Ethereum. And so right now the space is hot because Bitcoin obviously has a lot of attention around it and people are just trying to buy in. And you wonder about things like, do you have at some point in 2017 all over again where things go off a roof? With Ethereum, there are a lot of people buying it who have no fucking idea what they're buying. There's a lot of people buying Bitcoin who have no fucking idea what they're buying. But Bitcoin is at least, it's simpler and it's older and it's more legacy in the sense that like more people are at least somewhat aware of how it works. With Ethereum, especially given the fact that we already covered where they do not have a cap supply on it. When you add that to the fact that so many people, as far as like in 2017, myself included back then, have no fucking idea what it is. How are we creating a price for it? Like, how is it trading at $500, $600, $700? And how do you actually value it moving forward? I know how you do because you are in the world. You understand it inside and out. You see its application. But how is a general public like Joe Blow, who's investing in it on Robinhood, which is the worst place to do it, or
Sure.
Coinbase or something like that, how do they say, like, yes, I know this Ethereum is worth $600 and here's why?
So, yeah, this is something that's, valuation with cryptocurrencies is certainly a interesting topic. So, there's no central pricing for cryptocurrencies. Like the price you see on CoinGecko or CoinMarketCap or another data provider is basically an average of a number of large exchanges. So, maybe they're pulling from Coinbase, Binance, Huobi, Kraken, Bitfinex, and all these big exchanges. So, they can basically point to the ETH USD or to the BTC USD pair or another pair at a given time and say, okay, based on the average of these exchanges, like this is the price right now. So that's regarding the the kind of how things are priced. Basically, the market is pricing it, and it trades on all these different venues. It's basically a much different concept to the stock market, where things trade on basically one venue or a few venues. So basically all these exchanges around the world are, they all have their, they all have their own tech, and basically they all have their own traders and liquidity, and the market's kind of doing its thing and finding equilibrium. Regarding how people value Ethereum, certainly, there's a ton of transaction fees. I don't know off the top of my head how many they are, but if you were to use those to build some sort of model, I'm sure you could arrive at some sort of, value. Obviously, there's some assumptions that need to be made and these type of things in a model like that. But, there's probably a number of ways. I know in 2017, people like to use this network formulas and whatnot to measure, how much a coin might be worth based on like velocity and like supply and these type of things. But I think, like with, financial models for like, VC or P or investment banking or something, like it's an art. There's no one, perfect way to do it. There's a, number of different ways to do it. So
It's an art. Yeah.
it's, it's hard to say, but, on how exactly someone should model it. But, I think the transaction fees and like the amount of money being settled on it, the amount of it that's locked up, it's not moving, these are all things I think that folks should take into account. But there's no problem. There's no perfect answer here.
Yeah. The art on the Bitcoin side seems to be boiled down to, and I'm simplifying here, but it seems to be boiled down to scarcity and adoption. It is boiled down to the fact that it was the first and it's the most known and it's been picked up by more and more people and now has tens of millions of people around the world who are not only aware of it, there's more than that who are aware of it, but all these people who are literally invested in it.
Yeah.
And then you add to that it has a capped amount of supply at 21. And by the way, not all those 21 are going to be out there forever. As we pointed out earlier, there's like 5-10%, whatever it is, that are gone forever because it was burned on a hard drive or whatever. Yep. So you have a small amount. It's even more perfect than gold, where gold, they mine approximately, they adjust gold inflation for like 1.5 or 2% annually. They expect to mine that much more. And that's been very consistent over time. I think the highest it went in the last 100 or 200 years was like 2.5%. So gold is considered this inflation hedge and this very trusted asset, but Bitcoin is even more so that, because we know like it's going to be 0% very soon, and it's already at 18.54 or whatever million total that have already been mined, with only 2.5 million sub or so to go. So people have that valuation there, and Ethereum has had a shorter life, and people maybe don't have quite that valuation. But when you add into the fact that Ethereum doesn't, as we've said 7, 9, 12 times now, Ethereum doesn't have that cap on supply, and it doesn't necessarily have the awareness and adoption and the level of knowledge on an average per human basis that Bitcoin does. It's like you're sitting there and maybe it's that Ethereum is kind of Bitcoin in 2017 now, crash notwithstanding, right? Because that hasn't happened. But, where people are like, all right, I get it. I understand like this exists, but like I'm not really sure yet. Like there's not really that awareness.
I've thought about that a number of times. Basically, the market cap is a bit different, but like comparing Bitcoin or Ethereum to where Bitcoin was like right before 2017, like at the end of 2016, right? So like Bitcoin was at like $700, did this huge run up to 20K, and then it crashed down. But, Ethereum could be in a similar spot where it's at around $700, and maybe it sees a huge run up to like, several thousand or something like that. But, but certainly doesn't have the level of awareness Bitcoin has yet. But I think that will come in due time. And I do think that a lot of the applications that are powered by Ethereum, I don't think users necessarily need to understand that it's Ethereum powering it. Like they can understand if they'd like to, but I don't think that, normal users, they don't understand like, how Wi-Fi works or how the PC works, right? Like they just use it. And the complexity is abstracted away. I think we could probably see similar things with Ethereum and crypto generally, where people don't really, they're not aware that it's crypto on the back end, but they just use it and they like the service. So I think Ethereum's, building up. It's, it certainly has a lot of mind share in the developer community. There's tons of developers hacking on Ethereum. These hackathons that have kind of been halted by COVID, but and conferences are really wild. I was at Ethereum Denver in February, kind of like right before COVID, and it was amazing. There was like thousands of people, 1,000+ people there. The energy is insane. There's so many developers and cool projects being hacked on. All the teams are, all the crypto projects are there, all the founders, all the teams. So it's really incredible. But I think Bitcoin obviously has done a lot. Gained a lot of mind share in the overall investment community over the last 10 years or so. And Ethereum's only been around for roughly 5 or so years. So. I think it's building up the mind share, but I think it's making great progress.
This is another important, I don't know if it's a distinction or a point to throw at you and see what you think. You talk about how people are going to get behind it without maybe fully understanding it like they did other things, like parts of the internet and stuff like that. There's a difference here in my mind, and you don't have to agree, but let me just toss it out there and see what happens. When I look at like the social networks, for example.
Sure.
When someone goes on Instagram for the first time, let's say they went on there 5 years ago for the first time. They open it up. Let's say stories were around then. They weren't, but let's just say they were. They open it up. They see at the top, once they follow people, all these little circles that have lights around them that they can very quickly realize their thumb hits it and something comes up and they realize it's from that person's account. They come out of the stories, they scroll through the feed, and the feed is vertical. There's a heart right below the picture, and then there's an area that says add comment, and you see any pre-existing comments that were there. And they realize once they click add comment and it pops up and their keyboard pops up that they're allowed to do that and press enter and put it in. And they realize that when they hit that heart, or God forbid, they even just double tap the picture, that makes it red, and that means that they are a part of a public like on that post. It's very easy. In that sense, I've seen 85-year-old little old ladies figure this out. And, maybe they're not great at it, but they get it. When they do these things.
But they don't understand how the HTML works and
the
how
point.
The whole website works.
That is exactly my point. When they do this.
It's the same thing for the blockchain. It's like they use a wallet. Great, it works for their purpose. They're able to send money. They're able to like their friends' posts, but they're not understanding like what's going on in the background. Like it's not relevant to them. Like
two big differences though. This is what I want to toss out. Number one, it's money.
Yeah, money's different.
It affects. We're talking about it in the sense at the highest level here as new money, as a potential.
But do normal people know how Stripe works when they use their bank? Like
they don't know how Venmo works either, but they just know that there is a third party on it and that this is the way things are. It is backed by the FDIC. It's handled by the government in that way. The banks have to give them their money. It's a record right there. They can call up somebody on a 1-800 line for their bank and be able to settle things if it's a problem. It's a pain in the ass, but they know that's all there. When it comes to cryptocurrency, they realize, whoa, this is outside the system. This is not backed by the government or the FDIC or whatever. This does not have a bank that we can call up and handle this stuff. This is taking responsibility in our hands. And the second level to it is the transparency, and I believe this, the transparency, which is a positive, huge positive of the entire crypto community, is used against them. Because when Instagram came out and coded how to do the heart, and coded how to do a DM mailbox, and coded how to do stories, they didn't say, hey, here's the source code of what's on our server that we use. And by the way, every time you double tap, you can go click the source code and figure out exactly how it works. They just said double fucking tap and you'll figure it out later. And that's just what it is. Actually, you'll never know. With crypto, they say, hold on, you just let's call crypto Instagram now. You just double tap that heart. Here's how we did it. And then people, they're curious. They go in and they're like, what the fuck? And then they get confused. So in a way, that honesty, I think, sometimes is used against it. That's my point.
Yeah. I think a lot of the folks in the space now are early and they're interested in that type of stuff, but we'll have to see like if that gets abstracted with time. But I personally don't think a lot of people care. They're just trying to use an app or a service that's 10x better, faster, cheaper than the other service. So if it is, then they'll use it. If it's not, they won't use it. If it is, they may not care how it works. But yeah, you make some good points, and yeah, it's interesting dynamic.
Yeah, well, I mean, look, we need time. We need to see how it develops. But once again, I actually want to pull it back to you. I think I've said that a couple times, and we never ended up doing it because you've been in this space. You were early in this space, period. But now, I mean, you're a longtime veteran of this space. And
Thanks, man.
I remember, meeting you, and you were this curious kid who was like, you knew I was going to work at a bank and everything. You wanted to know everything about it, and you understood the stock market and the legacy system inside and out. And at first, like, this is years ago, like, you never talked about crypto with me or that kind of stuff. And I know towards like the second half of college, you really started taking the initiative on that and learning the culture, I'll literally call it, and understanding why people felt strongly about this stuff and how it applied to things. And then you started to apply your own abilities, be it, literally as like a connector in the space, or somebody who can also do some coding and somebody who understands some of the more complex stuff about it. You started to get yourself into these circles by networking with people who were really smart there and building up your Rolodex of not just knowing people, but knowing why these people are important and what they do. And so can you just walk us through a little bit your journey here beyond what I just said, and
Sure.
how this ramped up and when exactly it started and what that was like for you to stumble upon this?
Yeah, sure. Happy to. So I heard about Bitcoin in 2013 or 2014, like a lot of people, and kind of dismissed it, I think I heard about the time Mt. Gox blew up. So maybe
That was a hell of a time.
Yeah, so one of my friends had told me about it. He's a super bright guy, now doing great things out in SF. But he had told me about it, and let's see. So yeah, I kind of looked into it. I told my dad about it. Kind of forgot about it, right? So 2016 came around, and I had heard about Ethereum. So it was kind of like the end of 2016. Second half of the year. And Ethereum was kind of gaining some, momentum online and whatnot. And at some point I saw something about this Enterprise Ethereum Alliance, and I saw, oh wow, like Microsoft and like these other companies are dabbling with Ethereum, or however I was mispronouncing it then. So I thought that was super interesting. I started looking into it more, asking around. People said, oh, I've heard of Bitcoin, this and that. But, not that many people were thinking about it as like an investment. It was just more of like a, Bitcoin was, Bitcoin, and, no one really knew about Ethereum. So, I started following it really closely at that point. Kind of followed it through through 2017. That was obviously really crazy with, giant run up, in Bitcoin, and Ethereum saw a huge run up with all of the ICOs and all of these things, which.
ICOs, can you just tell people what that is?
Yeah, sure. So that was initial coin offering. Basically, people were selling tokens on Ethereum in exchange for Ether, or other coins. So yeah, basically I followed the through the run. In kind of mid 2018, I kind of stumbled upon DeFi, and I think it was Maker first that I had seen. And kind of got interested in what was going on there.
How'd you find that?
I think I saw the white paper somewhere, saw the Maker Twitter, and kind of was like, oh, this is this, stable coin, that's backed by, crypto, and that's super interesting. Maybe it was they got an investment from Andreessen Horowitz, something like this. So I kind of started paying attention. Maybe that was the next year, but I started paying attention to a DeFi. Around the same time, I was kind of, working crypto Twitter, trying to meet people, trying to grow my kind of, grow awareness of what I was working on and whatnot. So, I connected with this guy actually named Rick Burton, and I still keep in touch with him. He's a great guy. And I went to his place in Brooklyn, and I was supposed to like have a meeting with him, which we did have a meeting, but when I went to his place, I met a few people that kind of changed, how I was thinking about the space. But namely, one of them was Hayden Adams, who's the creator of Uniswap. So I met him really early on in kind of his journey. And when I met him, there was only several $100,000 of ETH and whatnot locked in Uniswap, and now there's several $1 billion locked in Uniswap. So it was really early.
And this is 2018-ish?
This is in like November or December of 2018. Yeah. So at this point, I kind of got like really interested in DeFi. I started writing about it, and then at a certain point, I was like, well, wow, there's no like meetups around DeFi in New York. Like this is really weird. I'm so surprised there's no meetups around DeFi. And looking back on it, like it makes sense. Like it was pretty early and whatnot. But
Can you tell people what meetups are?
yeah, sure. So meetup is just like a, you know, kind of like a, you know, a gathering between, you know, folks that have like a common interest. So, you know, there could be like a, you know, meetup for, you know, Ethereum, of course, or, you know, DeFi, or there could be a meetup for baseball cards or, you know, people that have a certain type of dog or something like that. So anyways, yeah, so I was like, wow, there's no DeFi meetup in New York. Like that's crazy. So I was like, well, you know, I should make one. So I made something called DeFi-NYC, which is basically a meetup group. And had our first meetup with MakerDAO, Staked, Balance, and UMA. So had this really, you know, interesting first event where I was at like a hotel, bar at in Manhattan around Times Square, and basically there was, you know, more than 100 people that showed up for the first meetup. I was like, wow, this is really crazy. Like all these people showed up to learn about DeFi and hear like what people had to say. So, you know, we had a number of other meetups, and, you know, had Uniswap at the next meetup. Hayden talked about Uniswap. You know, had a number of other folks, you know, did presentations, did panels. So, you know, started, you know, networking really, you know, aggressively, I guess, in New York, you know, around DeFi, and having these great meetups. We had roughly, you know, 12 or so meetups until COVID kind of, you know, stunted the in-person meetup. We haven't really made a transition to like Zoom meetups. It's on my like to-do list, but you know, I'm more keen on in-person meetups. So
Yeah.
obviously COVID makes that hard. But around the same time I started DeFi-NYC, I also started working with Staked. So Staked is a infrastructure provider in the crypto space where Staked largely helps institutions and larger holders of crypto earn a yield on their coins. So basically Staked is you know, running servers on different proof of stake networks, you know, actually more than 40 different networks, which is really wild. But yeah, they make it really easy for funds, exchanges, custodians to stake or build out functionality for staking on their platform. So yeah, I started working with Staked. I joined the company about 2 years ago as their first business hire and early employee. I think I was like employee number 4 or 5. So I helped them kind of on a lot of business efforts, wear a bunch of different hats, and help them grow, you know, their business, you know, by signing on crypto funds, you know, and other businesses. So yeah, that's been really great. Still working with Staked, and I've also been hacking on another project called Volmex.Finance. And Volmex is kind of in development project, but
What do you mean? By the way, you've said this a few times, but just to define it, what do you mean when you say like someone's hacking on the Ethereum
yeah, sure.
chain?
So when I say hacking, I just mean like just experimenting, building, these type of things. So there's hackathons. It's basically like when you build a project over a weekend and submit it and can win a bounty, win a prize, you know, get recognized. But yeah, like hacking can be associated with like malicious hacking. But like when I say hacking, I more mean like building. Yeah, but just to there is like black hat hacking, which is like you're hacking, you know, to you know, do something harmful. There's also white hat hacking, which is like you're hacking to find bugs and surface them so they don't get exploited by black hat hackers. But when I say hacking, I'm just talking about building. So yeah, so I started hacking on Volmex on nights and weekends. And basically we've built a volatility index for ETH. So think VIX for crypto. So we're calling it, so we're calling it ETHV index, or it's called ETHV index. And it's a index that measures the, you know, the volatility of ETH over the next 30 days. So it's super interesting. You know, you can check out the website at Volmex.Finance, VOLMEX.finance. And yeah, there's, you know, some info there. You can join the Discord group, read the intro blog posts. We're
You're active on there right now?
Yeah, so working on that on in my free time on nights and weekends. Yeah, actively working on that. So yeah, it's super exciting. But yeah, And then, yeah, I mean, just continue to stay active on Twitter. Try to continue to meet and connect with interesting people. And just keep my thumb on the space, or my finger on the pulse. Via Twitter. Telegram is a big channel for crypto.
Stop for 1 second, because I actually want to go back to your project. I don't want to just let that go. That is really fucking cool that you're doing that, and I want to make sure people know this. So when you say the VIX, which is on the legacy financial system, to explain that to people, the VIX is basically, it measures, it is a bet that people can buy into. They can buy it as an ETF.
So
yeah.
So VIX is an index first and foremost. There's also derivatives that are that use the VIX as like a reference, like futures and options.
Yep.
But basically, what VIX is doing is it's measuring the 30-day implied volatility of the S&P 500, and the way that it does this is with a number of options that it uses this data to price the index.
All right, let me pull that for you back into English. So what he means is that, let's say the S&P, I'm going to use fake numbers. Let's say the S&P is trading at 3,000 right now. It's more than that, but let's just use a round number. When I buy into the VIX and I then raise the price of the VIX, let's say I raise it from 15 to 40, which is a big move. That is, and it doesn't work this way. It is, as Cole said, it's implied volatility. It's like a guess. It's like a hypothesis. That means that the hypothesis of the general market, if VIX is trading at 40, means that they think that the market can flip 40% in either direction from where it is. And usually when it's high, it means 40% in the wrong direction at some point. So if I'm understanding correctly, Volmex.Finance, which is your Ethereum-based VIX, is doing the same thing on the Ethereum blockchain, but doing it with implied volatility of Ethereum, the currency itself there.
That's right. Okay. We'll be publishing, like a formal white paper and all of that. We have the indexes live today, but there's the documentation could be a bit built out more, but so your TLDR is perfectly right. It's VIX, or it's calculating the 30-day implied volatility of Ether, and it publishes this to the blockchain every time it's queried. So a user can pay a small amount of ETH and query the index, and it will publish to the blockchain.
When you say query the index?
When I say query, I mean that they can interact with the smart contract via Etherscan, which is like a block explorer, but they could also do it via like a website that our dev team builds, or we built. But yeah, so basically, they're able to send a small amount of cryptocurrency, Ether, to the ETH VIX contract, and it will spit out the current implied volatility for them, or the current ETH, I should say. So it's super interesting. Again, I'd say like Volmex.Finance on this URL, and we have a Discord and Twitter. Come hang out, ask questions. Happy to answer.
You're so low key about this. I love it. You're like, that's the deal. It's like, I just fucked around and built an options exchange on my day off. It's cool. It's whatever.
We have a lot to do and a lot to build, but it's first and foremost, we've built an index and a protocol for adding new indexes. We're really excited about it, and we're excited to share more. But it's we haven't published a formal white paper. There's no official documentation yet, but looking forward to sharing that with the community. And sorry for being a little cagey.
No, all good. I understand. Like it's obviously earlier on here, and
we haven't open sourced anything, but we plan to.
You're going to, right? Okay, I'll leave that there. Switch it up for a second onto something I was thinking about that I definitely want your opinion on, just to make sure we get it out there. And actually, I say I want your opinion on it, but the reason I want to bring it up is because you're someone who operates without an opinion on this, which I think is great. But it's the controversial coin out there that, depending on who you are, you call it a shit coin or the next great hope, and that is XRP. And XRP I bring up just because so many people are aware of like Ripple. They call it wrong because the company Ripple is the one who produced XRP, so they call XRP Ripple. But it's controversial, and I'm going to really broaden this in the sense that it is a coin that is created by a company where, as I said, Ripple, which also controls, I think, like 80% of the circulating supply. So they are completely in control of it. And their value add, very broadly, highest level, is that they are going to existing institutions and implementing XRP, among other things, at these institutions, be it big banks, enormous companies, whatever, and allowing for the value of XRP, which is quick transactions, no middleman, none of that bullshit, whatever that existing banks have, and saying, all right, we're going to implement that within the existing ones to make you get out in front of this. So people in the crypto community who are all about decentralization, the whole concept of Bitcoin was to go around institutions. Many of them dislike it a lot, like they hate it, and they think that it's a sellout and a total shitcoin and bullshit, and it might be. But you are a guy who does not say that, oh, it's terrible or, oh, it's great. You just kind of operate here, and obviously you're much more interested in Ethereum and much more interested in Bitcoin, but what are the like, besides the very simpleton view I just put on it, what are the possibilities you see with XRP, both terrible and great, and why does it matter, and why do people talk about it so much for the average person who doesn't really know much about it?
Sure. So this is a loaded question.
It is.
And I'm going to do my best.
Yep.
First off, I would say there's a lot of folks that know about XRP. A lot of retail folks that, like, are aware of it and, like, have bought it, or, like, you know about it. They have family or something, friends that have bought it. So I find that really interesting that there's, like, this awareness of XRP,
yeah.
which has something to do with 2017, like, just XRP going up, a lot, and in general. But I think the problem that it's my understanding is that the problem that XRP and Ripple, I'm going to use them like synonymously, that they're trying to solve is that they want to build a better Swift, and Swift at a high level is like the banking bank transfer system. So it's interesting. I don't have a good sense of like their penetration and like how well they're doing with that. What I can say is that it has a huge market cap, and like it's the third largest cryptocurrency, or maybe it's a third or fourth. I don't forget if Tether is bigger, but I find that interesting just from that it's been so successful. It's kind of interesting that what it's been able to do, but I don't have a real educated viewpoint on like, are they doing a good job at replacing Swift? Like, it's interesting, it works, I suppose. I think anything that works is good. But we'll have to see what happens with it. So like the market cap's like really rich already. It's hard to say like what the price of XRP will look like. What I will say is that there's a ton of retail traders probably trading it, and like that it's probably a good speculative trading instrument, but I haven't traded it.
Yeah. And it's a messy one to touch. As I said earlier, I don't own any of it. I don't have any plans to either. I have significant reservations about it because of the fact that, look, you are run by your early adopters, and it's not that XRP doesn't have adopters. It absolutely does. But the space of crypto and the space of decentralized currency, the early adopters of that adopted again because they believed in a system that operated outside of the current power system that be, right? The governments, the institutions. And when you see XRP actively integrating with those institutions, they're basically, the way I view it, saying, we're going to meet you halfway. We're going to bring a better system. Shit's going to settle a lot easier. You can move 1 billion pesos from Mexico to South Korea now using XRP in 3 seconds as opposed to like 5 days with all these middlemen. But we're going to do it through the systems that we know and trust. And that's a very bastardized way of putting it. And some people will say that's completely uneducated. But at a high level, that's how a lot of people in the space see it. So I look at it like, hey, regardless of how I feel about that, which, look, if I wanted this to go the way I wanted it to go, I would want none of the institutions to be able to have any level of that control they already have. I don't want them to maintain that. I want people to actually take back money and the power behind it, which is what the whole system is set up to do.
Sure.
That said, assuming that I have no say over it and just looking at it unbiased, maybe that is the way people go. What it seems to me, though, when not just the price action from where it fell from and what it hasn't recovered to, but when you see people who are the earliest adopters of the space talking online and the communities they're building, it seems like a lot of people are like, no, fuck that. We want it pure or we don't want it at all.
Yeah, I mean, candidly, there's some sort of animosity towards XRP in the crypto community. I'm not exactly sure like when that started. Well, yeah, I'm not exactly sure like the origin of that. I think it has something to do with like the pre-mine, and there was a lot of
pre-mine,
like the fact that the team owns so much of it.
Yeah.
And like early on in the Bitcoin community, that has become more common as more like tokens and stuff, ICOs. It's become more common, and there's a different type of launch coming about now.
And most of them are immediately written off as shitcoins now because people have seen that movie. They've seen that movie in 2017, 2018.
Well, let me say something. So I think there is a big kind of animosity maybe towards pre-mines and stuff early on, but I think it's becoming, people think, now people realize like developers need to get paid. Like they probably need to keep some amount of tokens like to be properly incentivized
Sure.
and whatnot. But yeah, I think that that's probably why there might be some animosity towards XRP. Maybe the centralization, or I don't know, like they have a really aggressive Twitter army and whatnot. But I think it works I think it works. As far as I understand, it works. And like I said, like I'm a fan of things that work. In this crypto world, like there's stuff that doesn't work, but it seems that it works for sending money around cheaply. I can't speak to like how many banks are using it and whatnot. Like, I think there's some, their CEO, Brad Garlinghouse, talks about that type of stuff. So, maybe check out an interview with him. But yeah, I think overall, I think it's interesting. I don't really have a super, opinionated thoughts on it though.
Taking the middle ground. I appreciate it. One thing I will say on it that personally hit home for me, that put up some red lights, and that is, as I mentioned, I used to work at a bank, and so I worked in Merrill, and Merrill was owned by Bank of America.
Sure.
In light of the global financial crash and that deal that happened in 2008. Yep. And Bank of America ruined Merrill Lynch. Think what you want about banks or whatever. Merrill had a certain culture, and over time, Bank of America ripped that fucking thing away. And it was very sad to watch it happen. And I was there watching it happen and watching that sausage factory mentality just completely take over any ability to do anything for people that worked at Merrill within Bank of America. Neither here nor there. The first time I really noticed Ripple, though, operating in some ways where I was like, this ain't it, was on some very hidden things at Bank of America. So I had access to all the company research, which have all the little disclosures, all the internal research and everything, at the bottom in the small print that no one reads. And I remember seeing in like page 3 of, size 4 font disclosures at the end of some research report I was reading, this may be like 2.5 years ago, 3 years ago, talking about how Bank of America was working with the company Ripple on the implementation of XRP for blank, blank, blank. Doesn't matter what it said, but it was talking about like transactions and things. And I looked around and I looked at my desk where there was a 2009 HP monitor, carpets that below me that hadn't been replaced in 30 years, and a system that was operating using Internet Explorer that blocked Wikipedia some days. And I looked around the rest of the office and I looked at any of the technology we used, and I wouldn't even call it technology. And I also knew how serious our team that I worked with was as far as the amount of assets we managed and the types of people we did. My boss dealt with people who run society, so to speak, right? And I'm like, okay, let me get this straight. This company gives us these quote unquote resources and claims to, like, they weren't even letting people use Zoom when COVID happened. Like that, they weren't even letting that happen. I mean, that's how tight this was. And they basically treat everyone at Merrill like mushrooms, feed them shit, keep them in the dark. But on the back end, they are, at the time, Bank of America was globally had the 4th highest investment in blockchain technology of any company on planet Earth.
And they're filing patents like nothing.
Left and right. And this and so I went deeper because I'm like, oh, and they're integrating XRP, but we're not even allowed to talk about Bitcoin with our clients, let alone trade it. We're literally not allowed to talk about it. I'm like, that's interesting. So then I went digging online because all these answers are somewhere. And I realized that Bank of America, even like on LinkedIn, had all these crazy roles on the technical side of the business.
For XRP?
That was what?
For XRP? Or
they didn't say that. But
I thought you meant they had like an advisory role for Ripple.
Yes, they did. But here's how they sold it. They'd have these long name titles, right, on LinkedIn, like looking for a engineer in the blank blank space of technical malfeasance or whatever. And then I'd go in, I'd read the description, and they'd pack the whole top of the description with the basic bullshit, like, you know, looking for somebody who's motivated, has 5+ years of experience. But then you go down and suddenly it goes to, this role will be working directly with the company Ripple to implement the XRP ledger within our system to do blank. Yeah. And it would have all this shit. And I'm like, this is not why this stuff was created. This was not created to keep Bank of America growing as a sausage factory here. But that's what they're doing with it. And so, again, I don't have the full context there because I'm an idiot going in and looking that shit up. I'm not somebody in this space who can truly understand all the nuance of it. But when I look at that, they're not saying we're working with the fucking company Bitcoin to implement the Bitcoin on the ledger for all our clients because there is no company Bitcoin. Yeah. But they're working with this company Ripple that controls 80% or whatever it is. It's a big percentage that they still control of the XRP currency. And they're working with that to be able to implement it as if to get ahead of all the people who they need as clients to continue to exist. That's scary to me.
Yeah, you have an interesting point. Enterprise blockchain is something I'm not too close to, actually. But I think it's interesting, but it's hard to say, like, like investing in, like, private ledgers and, I don't know, like experimenting with Bitcoin or... well, let's say like experimenting with Hyperledger, which is like a private blockchain, or Quorum, which is like a fork of Ethereum that's like permissioned, or like XRP. Like we'll have to see like how these enterprise blockchain efforts are like what happens with them, like if they amount to anything, or I'm not sure. Like I'm more close to the public ledger stuff, like less enterprise, more just like publicly, out there, not permissioned, blockchains. But, I think this tech has a place in these companies, and I just think they're trying to find what it is. So they're doing a lot of R&D, probably these different shops, different companies, trying to figure out what's working, throwing shit at the wall, hoping it sticks. So, but yeah, I think we'll have to see what happens with these enterprise blockchain initiatives. Like, I do see what you're saying, like, it's not really in the same spirit as crypto because it's like, it's, they're using this tech to further their institution, but we'll have to see what happens, right?
Yeah. I mean, it's time will tell on it. No doubt about that. But it's just, that's something I think about a lot because I don't know what I don't know.
No, and it's an interesting insight.
Yeah. There's so much I don't know, but walks like a duck, quacks like a duck. It's usually a fucking duck. So it's just, but going back to the higher level here, because I think our last area of conversation here, going through some stuff, we really should focus on the things that most people are aware of. So I really appreciate taking a deep dive on Ethereum today, and that may come up in this context again at some point. But when we're looking at Bitcoin, everyone's now in prediction mode, right? Even people who have no fucking idea how it even works or what it is. They're just looking at the price action because they're like, ooh, I can make money. You have, and these guys actually do know some stuff because they do at least study it, but you even have the big institutions like I talked about earlier, like Guggenheim and all them coming out calling price action and saying like, oh, Bitcoin's going to be $400,000 by 2025. And you have every asshole on Twitter saying, I see Bitcoin at 80,000 by the end of October or whatever. And no one really knows for sure, but what people are trying to measure is the supply and demand. And they're trying to say that like, hey, throughout its lifetime, 2017 being the most recognizable one because more people were aware of it then, but throughout its lifetime, Bitcoin has gone way up and come back down and then struggled and then worked its way even up higher and then come back down and gone through these little cycles, and they're usually 2 to 3 years. So now we're 2 to 3 years into this new cycle here that hit a enormous low, obviously, comparatively speaking, at like 3,200 in December 2018 off the 20,000 high. But we've only just crossed that 20,000 and we're up at 23, 24 now. And so a lot of people are trying to say like, all right, I think this one could now get the price up times 4, times 5. I don't put a lot of stock into, no pun intended, into what any of these people are pontificating. What I try to do is I try to say, where is Bitcoin in 2030? Where is it in 2035? And not just where is the price. That's just a byproduct of it. Yeah. Where is the actual concept and what do we look at it as? And what is it? How much bigger is the adoption? Do you have any opinion on that, or is it just totally open space for you?
Yeah, we'll have to see what happens. Let's see. So, I think it's timing the crypto market, and price predictions are like next to impossible. So hard to say like what the price will do, obviously. Hopefully at that point there's lots of retailers accepting Bitcoin, lots of businesses using it. Folks using it as a savings technology or, to save money, putting a lot of wealth there. So hopefully it's just like widely accepted as money, like it's starting to, but like hopefully at that point, like you could just say to someone like else, like, hey, like, don't worry, man, I'll send you that dinner in Bitcoin. And it's not, I'll send you the money for that dinner in Bitcoin. It's not just, haha, man, like, Bitcoin, like you're still doing that, like it's so maybe just a more widely accepted medium of exchange. That could be one thing. Let's see, but yeah, it's hard to say like exactly what will happen. And obviously I do think, well, not obviously, but I think Ethereum has a good chance of being larger than Bitcoin. Certainly not impossible. I think if you compare Bitcoin to gold, Bitcoin is, the gold market cap is 9 trillion, and like that's maybe a reasonable comp for Bitcoin. It's much harder to say like what the Ethereum addressable market is because it applies to like what we were talking about before. It's like a thin layer of tech that applies to a lot of different things. Yeah. It's hard to say like exactly, what the addressable market is there and like how much value Ethereum can accrete. But what I can say is that with like something like the EIP 1559, if that was to get implemented,
what is that?
That's like when they burn the small amount of ETH for every transaction. That could result.
Which means what?
Which basically means the supply is reduced and therefore like should be like value accretive and maybe price goes up.
Deflationary.
So, like as there's more apps and more people building on Ethereum and more ETH is more transactions, hopefully, ETH accretes value from that as ETH gets burned. So,
all right, wait, fuck it, right down the ETH rabbit hole. I'm with it. Let's do it. So we're gonna pull back to mostly Bitcoin, but this sparked my interest. When you burn that ETH, who loses? Where does it go?
So basically, whoever's initiating the transaction, like it's a portion of their transaction fee that gets burned. So, like they're spending money to push the transaction.
It's part of the gas.
Yeah, it's part of the gas. Yeah.
Okay.
So that's hopefully going to go live soon. I believe there's a pull request or like an update like request out there for to kind of implement this. But it's not live yet. But hopefully it will be soon. But I think Ethereum has a good chance of being larger than Bitcoin, but it's really hard to tell. Obviously, if Bitcoin has a head start, but I just think Ethereum's solving a larger problem, like just kind of the whole trust, just trust on a bunch of different levels versus Bitcoin, which is really great, really cool, but it's kind of like a one-trick pony in my opinion.
What do you mean with trust, though?
So just automating all these different, applications and industries. So just the fact that the smart contract acts as a middleman or a counterparty, and it's basically automating trust automating.
Oh, I understand.
There's no bank required. There's no, there's no human component. All the third party is a piece of software. So that's what I mean by trust.
And you're saying that comparatively speaking, and we said this earlier, but I just want to clarify. You're saying comparatively speaking, Bitcoin doesn't do any of that. Bitcoin is just literally this store of value. It's that one, and I mean this in a nice way, it's that one trick pony, whereas Ethereum allows you to integrate all different levels of society into the blockchain that then has the currency below it.
Yeah, that's basically it. Yeah, I mean, Ethereum has functionality Bitcoin doesn't have, but I think Bitcoin is a big innovation in itself, like a monetary network, community-owned monetary network. One thing I will hit on is, I'm kind of jumping around here.
Go for it. We've been jumping all day. I love it. Let's go.
Tokens on Ethereum are like the best coordination and like incentivization mechanism like ever. Like that's like
Why?
the statement. So they you can incentivize like user acquisition, or you can use them to acquire users and basically, so there's this thing going on in DeFi called like liquidity mining, where basically users like who have coins will provide liquidity to a protocol in exchange for like their kind of protocol token. So common example is Compound. So they're a borrow lending protocol, one of the largest protocols, and they introduced their comp token earlier this year. And they said, okay, moving forward, everyone that's like a user of the protocol will start earning comp tokens. So basically they're incentivizing growth of their protocol. So it's just this new type of incentive engineering that's really innovative and rewarding users, and basically resulting in a community-owned network. So tokens allow for community-owned networks and coordinating communities and incentivizing them. So it's I think is a major innovation on that front, and that can be applied to so many different things. So if there's some sort of app, whatever widget app, they can if they have a good they can have a token that governs the platform, and they can distribute that to users and effectively move to a community-owned, protocol or network. So it's a kind of powerful concept, but people should be very careful with tokens. That they're immutable; they cannot be changed. If you fuck up, or if you mess up,
you can say whatever you want here.
If you mess up your token distribution, like there's no going back. It's one way. So. Yeah, I think tokens are a really incredible tool, and we'll have to see like what folks continue to do with them. But yeah, I mean, there's a lot of stuff happening on Ethereum, but I think overall it's exciting space, exciting times. What a time!
Now you saw though in 2017, and you alluded to it earlier. One of the big problems was the ICOs. Because everyone and their mother was like, I'll do a fucking token for this or, for that. And we're going to create this on the blockchain. And a lot of them were written on Ethereum, no?
Yeah, pretty much. So I actually did some research in 2018 with a Columbia professor and Fordham professor named Paul Johnson. And we wrote a paper, which you might remember.
I do remember this one. Yeah, tell people about that.
And we wrote a paper called Money for Nothing, and we kind of analyzed like all these ICOs, and basically, how a lot of them failed, delivered on their promises, all this type of things. But yeah, like it was like 95% or something like that was built on Ethereum. So to answer your question, most of the ICOs were built on Ethereum. So probably your next question is like, what happened to them? A lot of them failed. Mm-hmm. They raised money for some ambitious, project, and they like couldn't. There was like execution risk. They couldn't ship it. Something went wrong. Like they built it, they couldn't get users. Like there's some successful projects that came out of the ICO era, like MakerDAO, Maker, what we're talking about a lot today, or oops.
You lost the volume. You good?
No, I'm good. Yeah, Maker. Yeah, basically, like the community kind of, saw these projects as, I don't know, like there's this perception of like they raised the token or sold the token and like didn't really deliver anything valuable. This is an issue. So the sentiment now is like, let's build and then start centralized and distribute a token later on to the community. So,
explain that.
So that's kind of the liquidity mining thing I explained. So like the development team, they build a protocol, basically has like a kind of, I'll call it like a backdoor where like the developers can like kind of have the ultimate authority, and kind of early on. So if something happens, they can use their admin key to like, kind of resolve that. But basically these protocols transition to like a community owned protocol where they kind of eliminate that backdoor, that admin key, and kind of transition to like something that's owned entirely by the token holders. So distributing that token kind of like is that transition to a community owned network.
Community driven. The concept of these things being built across a global community of the people. That's what it all comes back to, and we've hit on it a million times today. But I can't help but think of this book I read pretty recently that drives home a lot of this point and what's happening right now. I think I talked with you on the phone about it a couple weeks ago, but the book, The Fourth Turning, did I mention that?
Yep.
And you hadn't read that, right?
I have not, no.
Okay.
But we talked about it briefly.
Right. So the very high level view of The Fourth Turning, without going all the way through it, I'll review some of the basics. It was a book written in 1997 by two guys who were historians/sociologists, and they basically read history over, call it the last 1,000, 2,000 years. And they broke down history into what's called a seculum. It's just a pattern that occurred over and over again. And a seculum, I think, is a Latin word for like 100 years or something like that. And what they realize is that, especially since, say, like 1600 or 1700, we have operated on, instead of a full seculum of 100 years, it's been about an 80 to 85 year life cycle across civilization. And what that means is that the life cycle refers to the generations within those 80 to 85 years. And to bring that down another level, they were saying that each generation runs on an approximately 21-year range. And that would mean that, for example, millennials, as we may call them, would operate over a 21-year birth history, and Gen X, a 21-year birth history, and boomers and all the way down, which is a little different than the way some generations have been defined. Like people say the boomers are 46 to 64, and Gen X is maybe 65 to 81, and millennials are 82 to 97. They're saying that those numbers are a little off, and it's literally full 21 years. So and sometimes they vary a little bit. Like the boomers, they view as like early 40s to very early 60s, and Gen X, they view early 60s to early 80s, and so on and so on. And the reason this is all important is because they realize that this shit occurs in patterns. And by patterns, every generation, what they meant is every generation matches some form of narrative. So they broke it down into what's called prophets, nomads, heroes, and artists. And so without going all the way into those, each of these generations serves a different purpose. And they all have 4 parts of life. So there's childhood, there's coming of age, which is like age 21 through 42. There's midlife, which is where the generation is in power in society, which is, I think, like 43 to 63. And then there's elderhood, which is when, nicer way of saying you're on your way out. And that's 63 and above. And when each of these generations, the prophets, the nomads, the heroes, and the artists, reach like each of those points, there is a specific thing that happens over and over again, patterns in society. And so, long story short, right now, this period from, say, the mid-aughts to what's going to be 2025, 2030, is a period that's called a crisis. And this occurs every 4th generation. And a crisis involves economics, sociology, geopolitical events, wars, stuff like that, and it just occurs over and over again. And what these guys hypothesized in 1997 was, instead of being like every other historian, sociologist ever who tries to read history and then change it for the future because apparently they know more and doesn't just subscribe to the fact that history does in fact repeat itself, these guys just said history is going to repeat itself, and without going exactly into how it's going to happen, here's what's going to happen. And they literally broke down that there was going to be a major economic crisis, earliest being like 2005, but latest being about 2010. So that happened in 08, 09. They nailed that. And they broke down that throughout that next period, which was this full crisis period, there was going to be a massive societal uprising and change. So I then look at it and I start to measure out when some of these things happen. So they're telling me, for example, that a crisis happened, or is going to happen, and that if it happens every fourth generation, that would mean, according to their numbers, the last crisis was 80 to 85 years ago. So when you measure that over that period of a 20-year crisis or so, go back 80 years. 0809, we have our global financial crisis. 80 years before that, we had the stock market crash and the Great Depression that followed. So instead of a Great Depression this time, we had governments come in and print money and then save some things. But what did they do? They created the biggest wealth gap in history throughout the 2010s that then just got a big button pressed in 2020 with COVID that just made it even way worse. So Great Depression, wealth gap. 1940, 1941 last time, we see World War II break out. And that ended up being this big crisis. So we're in that period right now, 80 years later. But the question is, is Corona a precursor to some of that? I don't know. That gets a little above my level. And by the way, I should just say, what was 80 to 85 years before World War II? Civil War, 1861 to 1865. What was 80 to 85 years before that? Revolutionary War, 1776 to 1783. This shit is happening in cycles, and you could draw it across the entire cycle. But I really focused on and had my own little epiphany with the economic side of a crisis period and some of the parallels to what we saw with recently the stock market recently. I say the last one that happened before this, which was 1929 into the 30s, which was the stock market crash and the Great Depression. How did the Great Depression get fixed, quote unquote?
The New Deal.
Exactly. You had FDR come in, and FDR comes in and inherits the worst blank deck you could ever get with the Great Depression, post-stock market crash. And in order to save America, he implements all these systems, these government-sponsored systems that had all these downstream effects, including, by the way, the fact that they didn't help out minorities at all. They kind of left them out and created systems that still exist to this day. And he started things like Social Security and I believe Medicaid and stuff like that, which didn't take into account population growth and longevity of life. They created exponential systems that are just ticking time bombs to eventually blow up, which, by the way, we're statistically not far off that happening. Throughout that time, he also then outlawed gold bullion. In 1937, the government did an enormous recall on gold bullion. People don't know this. And immediately upon taking it back from citizens by force, they then repriced it and created a new price on it and basically got the government richer and took away the world's most precious asset from its people. And so that didn't include jewelry, but it included people who actually own gold. And so all these things pointed to more government growth and more government control and taking power away from the people and creating a system that was designed to eventually fail. Now I come back to the present day, and I look at a system that did fail for people in September 2008 when it started to blow up, where all these banks had taken all these bets, and suddenly, boom, and citizens are left to pay for it with their tax money, and all the trust is gone from the system. And so Satoshi comes out and creates Bitcoin on October 1st, 2008. That is not lost on me, that irony. And no one knew what it was for years, or very few people did. But throughout this 2010s period, it grew. And the distinction I make there, and it might not just be Bitcoin, it may be the entire space of crypto itself, but the distinction I make is that, in a sense, if we're looking at this parallel history that these guys laid out, you essentially had the New Deal, and now you have the New Deal. And the New Deal is, instead of the government coming in and solving things and creating systems that are fucked, the people come in and say, you fucked that up last time, this time we're getting it right, and we're going to create a system that works, and we're going to do it in a way that takes out human error. Bitcoin being the best example, by setting things like not just a transparent ledger, but by the way, this is going to be a monetary system that has a fixed supply. You can't fuck with it. No government can ruin it. No guy who has to win elected office or save his ass can say in the short term, all right, we're just going to print money and solve the fucking problem and leave it to the next guy. There's no kicking the can down the curb.
Yeah. Bitcoin's not a bubble. Bitcoin is the pin that pops the bubble. That's like a kind of an idiom in crypto, I think. But I think Bitcoin is, and crypto is probably a solution to a lot of issues going on in the world. and should be transformative for society, can make the world a better place and enable, a lot of different things. So, but yeah, I think there's definitely parallels. I need to think about it a bit more, but it's certainly an interesting topic.
Yeah.
I know you've thought about it a lot, so it's cool.
Yeah, I just laid that one on you. Sorry, pal. But I just like, it's so clear to me, and it's like we're at that frontier, and this might be it. And seeing how the space has risen up in the face of 2017 and all the bad branding that happened at the when that started to go wrong, and how much it's turned around, and people are now using a crisis time, a COVID time, to see the value in this. It's a pretty crazy thing. So
Yep.
Listen, I really appreciate you coming in here and running through all the shit you're working on, man. This has been great.
Thanks for having me. This was amazing. Looking forward to next time and seeing this online and seeing listening. So it's really great being here and having this discussion with you. This is really awesome. Thanks, Julian.
No problem, man. Anytime. And I look forward.
Like and subscribe to TRENDIFIER.
Thank you. I look forward to having you in again. And where can people get you on Twitter? Because you are a king on Twitter.
Oh, man. That's flattering, but please no. My Twitter is Cole Got Tweets. So COLE Got Tweets. And I'm also on LinkedIn or whatever else. But yeah, hit me up on Twitter. Send me a DM. I'll answer you. I
will put that link in the description of this episode so you have it. Cole is followed by a lot of prominent people. He's going to be too humble to say, but he has a very good network ability on Twitter and is in the middle of a lot of shit. Very cool shit. So
thanks, man.
Anyway, this has been awesome. Thanks for coming in. We'll have you again. And
awesome.
Everyone else, give it a thought. Get back to me. Peace.